again, and boom. You know, and one of the things I think makes 65 challenging is just because it's a lot of stuff and it's kind of all over the place in terms of that.
Hmm.
All right, can you see my screen here?
Yes, I can.
All right, now we're on the right track. Broker dealers. Let me start again. Boom. Okay. Broker dealers are required to furnish clients with a fee disclosure document. All the following are true except. All the following are true except.
Mhm. Are you just in response to the fee disclosure? Okay, so what's wrong? I think that well, I know they have to be registered. I I'm torn between B and D.
You are correct. It is either B or D. And remember, it's except. So that means they're asking what is false. So you have to decide whether B is false or whether D is false.
D seems like to me that it would make the most sense.
Yeah,
I,
you're correct. It is D. So B is true. We do have to give you 30 days advance notice to change fees.
okay.
D is true. So you got it correct. D is not true. What is true is we have to tell our clients 30 days in advance because that gives them an opportunity to say, hey, I'm out of here. Goodbye, State Farm. Hello, Allstate or whatever, right?
Hmm.
An investment advisor rep, that would be you, recommending investments for an IRA should give primary consideration to. So these are those judgment questions, which are pretty tough because they're
Hmm.
actually, asking you to, you know, come up with the best thing.
So let's see. I know, I mean, mm, investment advisor recommending investments. Oh, liquidity wouldn't really be a concern because
That's
it's down the
exactly right.
road.
That's exactly right.
Um, Risk, I mean, in this scenario, they're already committing to put it not never money, but not now money. So,
That's right. So,
um, between C and D, and
so whenever you're wrecking investments, because you got to be real careful because, insurance is particularly a safe kind of a thing. I say, hey, a
mhm,
fixed annuity, the insurance company is assuming the risk. In a banking product, very safe. The bank is assuming the investment risk of a CD or fixed annuity. When you make investments in securities, it's important the customer understand the risk.
the
You said,
risk.
is
Okay.
it possible that I could lose my money? I say yes. Now you were on the right track because you knew that IRA means retirement. So I love what you said. I might have to steal that. Not now money. So
Yeah.
not an issue. It's about an individual retirement account. So the
Okay.
individual retirement account is about you, not your beneficiary, and
Okay.
particularly not your beneficiary's tax status. And
Gotcha. Yeah. I always say it's not now. Is it now or never money?
yeah, I like that. Yeah, I like that. Like I said, I might have to steal that line. That's a good one. And then maximum current income. No, you don't care about today. Your point, right? You're comparing about retirement. One of your clients has just completed a divorce. This is very testable. I can't imagine any draw in which you don't get asked about a qualified domestic relations owner order. The client is a participant of 401k and has a traditional IRA. The divorce settlement includes a quadro providing for half of the client's account to go to the ex spouse. The ex spouse also receives half the client's IRA. With regard to the ex spouse, which of the following statements is correct?
Let's see. I know C is no. That I know that the ex spouse's name wouldn't appear.
That's correct.
Um,
That is correct.
and I'm almost certain that the ex-spouse has 60 days to complete it.
That's correct. That's right. So
And
D,
let's see. Okay. And this is about the ex-spouse. So
really the ex-spouse. So
which is correct? Uh-huh.
yeah, which is
The
correct.
ex-spouse.
So the quadro, remember, has nothing really to do with the IRA because the IRA is a separate issue, right?
Mm-hmm.
So, we can toss out the 401k, right? You
Mm-hmm.
said you're correct about C. That's not true. And the ex-spouse has 60 days to roll over the distribution. That would be true, right? But we're saying which of the following statements regard the ex-spouse. So when the ex-spouse withdraws from the IRA prior to age 59 and a half, it's a 10% penalty. Now, the only test question here would be to know that the quadro from the court order, it's not considered a distribution, a taxable distribution for the ex-spouse to get that half that 401k or whatever the judge says to give him or her. So that was
Yeah,
another.
what's throwing me is the word, I don't know why, but ex-spouse. It's yeah.
Yeah, the ex-spouse. So they're not asking about the person who, the person, the divorcee, I guess. Oh my God, how do you do it? So grammar is kind of challenging for sure. In this industry, many words have similar meaning. Boy, isn't that true? It's like learning a.
Wow.
Which of the following choices consists of a pair which are not properly considered synonyms? Oh my goodness. So
Not
this is like one of
profitable.
those yeah, SAT questions, right?
Yeah. Okay, so
Something here that does not go together. So three of these things do go together. One of these things do not.
I'm drawn to C, but
Financial risk and market risk. Financial risk and market risk. You are correct. Those are entirely different things, right? Interest rate risk, money rate risk. I've never heard of anybody on test saying they saw money rate risk. B is
mm,
certainly a pair, and D is certainly a pair. So you're right. Those do not go together. Financial risk is like default, right? Like credit risk.
yes.
Market risk is the tendency of securities prices to move together. Excellent. Currently, a company issues a 5% AAA debenture at par. 2 years ago, the corporation issued a 4% AAA rated debenture at par. Which of the following statements regarding the 4% issue are true? Wow, this is a judgment question. I like this question. It's a tough one, but I like it.
Okay, so they issue 5% par 2 years ago.
Yeah, so what you got to
Ish.
remember, I always joke, if anybody asks you about economics, finance, or investments, and you want to sound smart, you should say, yeah, there's a lot to do with interest rates. When they say, what about them? You say they fluctuate. They go up, they go down. And you say, is that good news or bad news? You say, it depends. Can you tell me more? But it's very testable to know there's an inverse relationship of bond prices and interest rates. So
I
the
know when
first thing,
interest rates go up, the bond price
yeah,
goes
there you
down.
go. That's right. So here it says right now it's 5 and before it was 4. So you're right on the right track. That means that 4% bonds price has gone what?
If it was 5 and now it's 4, as the, does it say the interest of,
Yeah,
oh, the,
remember 2 years ago it was 4 and now it's 5. So again, they're kind of being a jerk here because they're giving you the 5 before the 4, but they're saying the 4 was 2 years ago. So now the company is paying more interest. So interest rates have gone up.
then the price of the bond has gone down.
That's right. So we need two. We need two. And if you are paying a lower price, right, current yield is what an investment pays you divided by what it costs you. A good way to remember it is AMP, the annual interest divided by the current market price. So if the current market price has gone down and the amount of interest remains the same, the price has gone down and the yield has gone up. So yeah, that's a tough one, right?
Because the rates and the yields move together, right?
That's exactly right. That's
Okay.
So this went from 4 to 5, right? So boom.
Mhm.
You're going to get at least one or two of those kind of questions on the test. I think this one was kind of hard because they made you interpolate. Don't you love that word, interpolate? They kind of made you reverse engineer what happened based on the scenario in the first part of that question, right? So you first had to get comfortable with the first part of that.
I'm terrible at those.
Well, yeah, well, there's about half the test is that investments and
Oh,
half
great.
regulations, right? A major stockholder of XYZ Corporation makes frequent purchases and sales of the stock in the open market to give the impression, false impression of volume. It's actively traded. This unethical practice is best described as.
Get wash trades.
Yeah, right on. That's exactly what that is. There's no effective change in ownership. And so we're just trying to give the false impression of volume. It's such a classic that we have a name for it called painting the tape. Painting the tape is giving the false impression of volume, right? Now, good news for me, I don't have to give the false impression of volume because, my YouTube channel, I'm pretty blessed. But there are people who will create fictitious accounts and subscribers and post. It drives me nuts because, it's not a regulated environment like our business is. And I would say,
Yeah.
hey, come on, those aren't real people. That's you. By the way, let's just talk briefly about unethical business practices. On your 65, this is indeed a very target-rich environment. Unethical business practices can be easily 15 questions. And
Okay.
so you should know what front running is. Front running is trading ahead of your customer. That's a big, big no-no, right? So, and then C, pegging is when you're artificially keeping the price of a stock at a certain point, at a certain level. I say, listen, I have as much money as necessary to peg it at 75. So buy as much as you got. Don't let that stock go below 75. That too is a fraudulent device. Which of the following actions by an investment advisor rep, that's you, would be an unethical practice of the Uniform Securities Act?
No, A, you can't do.
There you go. Boom. Right. That's exactly true. That's very much a test question, by the way. I say, I need to acknowledge here that I may be ripping you off, and if I am, you won't hold me accountable. No.
I was gonna.
I need to acknowledge here that you're waiving your right of rescission. No. I need to acknowledge here that you're gonna let me assign your contract without consent. So any contract that has anything that's contrary to the protections of the Investment Advisor Act of 1940 or the Uniform Securities Act is null and void. Those are sometimes referred to as hedge clauses. You can't have a hedge clause in the contract that works to kind of nullify any of these things that we're discussing. Good job. If a corporation issues mortgage bonds, all the following would be affected except.
This would be debt issuing mortgage. Okay. I, okay, so I've missed this one a couple of times.
Yeah, I think when you're trying to uh, do this, what I would do is kind of go to your own personal situation, right? If you issue a mortgage, your assets go up because now you have an asset called real estate, but so do your liabilities go up, right? And so there's been no effect on your net worth. It's carrying the larger, loan, but there's been no effect because there's an asset now on your balance sheet called real estate, and then on the other side there's a liability called a mortgage.
Then you
Now,
got to pay
what
it.
that's right, and so if you go back to like your personal balance sheet and you say, "Hey, Dean, I have this XX equity line of credit on my house." I say, "You do?" You say, "Yeah." I'm thinking about writing a check on that credit line, my ELOC, my equity line of credit, for $20,000. What would happen to my personal balance sheet? I'd say, well, Starla, your liabilities are certainly going up. You are going to get your working capital to increase, right? Because current working capital is your current assets. You just told me
Mhm.
you're going to write a check for 20 grand. So Now you got $20,000 in cash over there. The excess equity line of credit is a long-term liability, not short-term. So your working capital, current assets minus current liabilities is going to increase. Your total assets increase because, again, you now have this cash, but it has no effect because you also have a matching liability. So the thing that's unaffected
Mhm.
is your net worth, right? Now, this is
Yes.
testable on two levels. It's testable on both the question number 8 here, but it's also testable on your personal situation. I say, for me to do a really good job for you over time, I need to know a lot about you. The more I know about you, the better I can be determining suitability. What I'd like to do is take a snapshot as of February 28th, 2025, a picture in time of where you're at before we start our financial journey together. Can you tell me about your assets, your current assets, cash, or things you plan to turn to cash within 12 months? Can you tell me about your long-term assets, your house, your car, your retirement plans? Could you tell me about your current liabilities, things you need to pay within the next 12 months? Could you tell me about your long-term liabilities, your mortgage, your car loan? What I'd like to establish is your net worth. Now, corporations do this every quarter. Maybe we need to do it semi-annually. I'd also like you to, go over your income statement. What is your top line? How much money you got coming in each month? How much money you got going out? To maybe see if we can redeploy some capital. Now, the reason this is important is because you're going to get asked about balance sheets, both on the perspective of the customer as well as a corporation. And it's a picture in time. And then you get asked about non-financial considerations. Like we had a non-financial consideration in an earlier question called risk.
Mhm.
I'm not saying that's not important. It's very important, but it doesn't show up on a balance sheet or an income statement. So the way you get those questions right is say, okay, does this show up on a customer's balance sheet or income statement? And then when it asks you about corporations, just try and translate it into your own personal situation, right? I mean, what happens if you do certain things? Like I had a guy who was struggling about what happens when you buy equipment. I said, well, I just bought a $10,000 generator. So let's just talk about Dean's balance sheet. On the asset side, there's no change because I had an asset called cash and now I got a generator.
It
But
evens
I did,
out.
yeah, but now I have less working capital, right? Because the cash is a current asset and the generator is a long-term asset, right? So, my liquidity has declined, right? So,
Mhm.
when deciding the suitability of a particular investments, the client's need for liquidity is.
Yeah. I think it's C.
Yeah, right on, right on. I mean, I would have been disappointed to miss that with your not now money or never money. Is that was your line? Not now money or never
Yeah,
money?
not now or never.
The capital asset pricing model. So, this is math is not going to make or break you on the test. And so it's not so much can you do the math, it's do you know the implications of the math. I hit the link for a 65 tutoring session and the guy said, Dean, I'm a serious math geek. And so I'm not paying you, to do math with me. Give me any two numbers I can solve for the third. And, he was a serious math geek. He passed, but he said, Dean, I wish I would have spent more time on recognition. I mean, I could reverse engineer things, but I thought I was going to get way more points than I did. And most of the time I still struggled because they weren't asking me to do the math. They were asking me to kind of recognize what it's about. So capital asset pricing model is most commonly to determine an investor's risk adjusted return, expected return, holding period return, time weighted return.
I'm torn between A and B.
You are correct. You are.
Um, and I think it's A.
You missed it. It's actually B,
Oh, okay.
right? Because, we're going to use your expected return to then say, are we happy or not?
Okay.
Right? Under the capital asset pricing model, our expected return from this investment based on, the risk-free rate of return, based on, what we would expect in terms of beta, would be this thing. So
The Sharpe ratio is the risk
there
adjusted,
you
right?
go. Just,
Okay.
and that would be about exactly that, getting the most bang for your buck. Right?
Okay.
Excellent. The investor purchased a Mosaics put option with a strike price of 105. If Mosaic stock price is 115, the value of the put contract is.
Oh Lord, it's these options.
Yeah, so again, it's not enough to make or break you. This is derivatives. And so the basic option positions, we have two types of contracts, calls and puts. You can either buy them or sell them, right? So we have four basic positions. So here I've established the choice to sell at 105. When you purchase a put, you have a choice to put or sell the stock at 105. It says now it's 115. So you say, gee, Steen, I bought that put contract and I didn't need it. I said, oh, well, what can I tell you? I mean, having a choice to sell might make you feel a little more comfortable, particularly if you have the stock in your portfolio. But yeah, you're right. Your choice to sell at 105 has no economic merit when the stock's at 115. That 105 put is out of the money.
Okay.
It's out of the money. And so it is worthless.
0.
Right now, again, this is the challenge on the 65. I'm not sure how many hours you want to spend on options because, is it there? The answer is yes. But I think there's more target rich environments, disclosures, unethical business practices, um, performance measures. So, at the
And
end,
I've gotten to the point now to where I have kind of, I guess I've given myself permission to move on from that
good,
because I
good.
was
I
so
love
hung
it.
up on it.
Listen, I love it.
Um,
I think more
okay.
people pass making editorial decisions like that than people say, because the 65 tells you, I'm gonna learn it all. I go, oh my
Mhm.
God.
No
That's
way in hell.
well, and when it's Steve's book or Kaplan's book, my God, the thing is like that big, right?
Yes. No,
Okay.
I've had to just say I'm gonna let it go.
Yeah, and if we want to get as much margin of a safety as we can. But what I mean by that is, you got to give yourself permission, even on the actual exam, too, to assign things to the universe and say, I'm going to make it up in volume, right?
Mhm.
I didn't mean to hit the button, so I don't know what it
No,
means.
you're fine.
A client owns an investment grade bond that has a coupon of 7 and is priced to yield 5.4. If similarly rated bonds are being issued today with a coupon of 5, it would be expected that the client's bond is. Well, that's kind of an interesting way to test you on this.
Mm, okay. Coupon of 7, and it's your sure. Okay, so many bonds being issued today of 5. So the one issued today is 5. Mm. Gosh, so they're asking me about
Yeah,
the
whenever
second one?
whenever you get asked about present value or net present value, right? Let's
Yeah.
just get rid of what we can get rid of. We should know that this is not B because we should know that if I have a bond with a coupon of 7 and brand new bonds only pay 5, that my bond is now trading at a premium,
Mhm.
right? So you've owned this bond. I say, hey, good news. Interest rates have gone down. And so your bond price has gone up, right? So you own an investment grade bond that has a coupon of 7 and is priced to yield 5.4. So that means you paid a premium for the bond.
Mhm.
And so B is out. If similarly rated bonds are being issued with a coupon of 5, I say, hey, other bonds, I think there's a pretty good value in the secondary market. And you say, well, Dina, I'm not quite sure I want to pay a premium like that. I go, well, what do you care about paying a premium? What you care is if you hold it to maturity, you'd make 5.4, and that is better than 5.
Mhm.
Right. So when we're doing DCF, discounted cash flow, we're trying to establish its a valuation technique to decide whether we're paying a fair value for the bond or is the bond undervalued, positive net present value, or is it overvalued, negative net present value? So I think this is kind of a complicated question, but I think we'd be happy, right? We would be happy if we can get a 5.4% return when brand new bonds are paying 5. So
Hmm.
I say the reason we're getting that is because it has a positive net present value. So this is a very difficult way to get at this concept, but I do like this question. I do like this question. Now, if the other version of this I would like would be if it was a 7% bond and I said it's priced to yield 4.8. Then we'd say, well, why do we want to buy that? Because
Hmm.
that would be a negative net present value, right? 4.8 versus 5. 5 is better, right? So
Hmm.
we're using it as a valuation technique. Now, I think this was a tough version of this, but what we're hoping is that as you keep working and doing these practice questions, that it sounds less and less of a foreign language rather than more and more. The key
Hmm.
thing as your tutor that I would hope you get more comfortable with is knowing that if we can get that and that's better, then this looks like a good deal, right?
Okay,
And if we get less than that, something less, it's going to be a bad deal.
got
Deal or no deal, right? As my mom likes to watch that and deal,
it.
you know. And here we say no deal, right? And here
Okay.
deal. It's a good deal. By the
Okay.
way, if it was priced right at 5, right? Same question again. Now I say coupon of 7, price to yield 5, brand new bonds are 5. There'd be no net present value.
Okay.
The present value would be the same, right? So that would be a sign of a very efficient market. Boom. Client is in a 30% tax bracket. So, the minute they say tax bracket, I say, okay, well, they're going to confiscate 30% of your return, the government, right? So if you're on a 30% tax bracket, so you're not getting to keep the entire 5%. Due to mature shortly. What yield in a municipal bond would result in the same after-tax return that now exist in the debentures? So there's a couple ways to do this. That's the other challenge with math. There's a lot of ways to do the math. By the way, you
This.
should know it's going to be less than 5. So you should be able to toss out C, right? Because you should know that if I'm getting 5% taxable, that the tax-free equivalent is going to be something less than 5.
Got it. And when I see these, I automatically think of the uh, taxable yield and 100% minus their
That's
tax bracket.
exactly where I would go.
Yeah.
Exactly. I would say, I know anytime I get a tax bracket that I should probably just take that right out of the gate and net it. So if that's what you're going to do, and I like it, it says we're going to take our 100%. You think of that as one, a dollar or 100 cents, however you want to do it, minus the tax bracket, 30%. And that means we're talking about capturing 70% or 0.70 of that 5% return, right? So now what we can do is, again, you're on the right track. So still now we got to finish up some math here. So now we can say either we can say one thing we can do is we can say, okay, well, that 5% that's based on par, right? And so 5% is the nominal yield. And so we're getting $50 in annual interest, but we're not getting to keep that, right? Because of that $50, we're giving back how much to the government? Well, we could either actually just take the 70% times 50, or here we can times it and say, okay, well, if we're getting 5%, but we only get to keep 70% of it, then I can do my math, right? Or I could take $50 times 70, whatever I want to do. 50 times 0.70. I get on my calculator.
That's what I got.
Good. By the way,
Mhm.
you're gonna get that as a question, right? So
Okay.
excellent, excellent, excellent. Now, when I tell people, people are struggling with, and I think we were talking about it, I'm very happy as your tutor that you said, Dean, I've decided that I'm going to give myself some grace. I'm going to, say, hey, some of this stuff I'm going to assign the universe. I'm going to make editorial decisions about where I pick my spots. Love it. And when
I'm terrible with math, and this was an easy one.
Well,
So,
there you go. So you get cherry picked, right? And
yeah.
so that was where I was heading. On the math we know is there, we should be able to perform. And we know we're going to get at least one of these tax-free or tax equivalent yield questions. So that's one of the four, right? So,
Hmm.
and if you can do that, then like I say, you can get awful spastic elsewhere and pass, which is kind of what the game is, right? An investment advisor rep, that's you, prepares a comprehensive financial plan for a new client. Part of the plan includes detailed portfolio recommendations. Seeing a negative reaction from the client, it becomes obvious that to the IAR that he's dealing with an ignorant person who's filled with many market misconceptions. It would be reasonable for the investment advisor rep too.
That's funny.
Yeah.
They've got a sense of humor.
You
Mm.
know, when I was a baby broker years and years and years ago, I thought it was nice when I kind of finally felt like I could, not to work with a client if I chose not to. Just say, hey, I'm sorry, it's not a match.
Yes. Let's see. So basically, the person's being an ass, and what are you going to do with them? Let's see. C.
There you go. At the end of the day, it's the client's money, right?
Hmm.
With their money. In which of the following does registration of an issue become effective when ordered by the administrator?
Okay. So I know that notice filing is when it's basically you're just letting it's already I
That's
call it
exactly
a
that's
federal issue.
that's right.
Integration is I don't think anything.
That's exactly right. Some of that, they're really good at making up wrong answers that sound,
Yeah.
yeah,
And I'm really good at picking them too.
yeah, yeah.
Let's see. So I know coordination is when it happens together.
I like it. I like
And
it.
so I think it's D,
I
qualification.
love it as your tutor. I love that. That was a very good process, what we call process of elimination, right? Process of
Mhm.
elimination. Now, remember, this registration also is the only one that is not December 31st. The registration of a security that's done through qualification is going to be 1 year from the effective date,
It
right?
took me so long to get that in my head, but yeah.
Right, right. Our Uniform Securities Act, the term broker dealer would include.
Okay, so I know a broker dealer is what I call the firm. Like I'm a
Yeah,
registered
that's
rep now.
exactly right.
State Farms is my
That's
broker
right.
dealer.
And
So,
they make their money through transactions. So
so
you're an agent of the broker dealer. So A is out. You're not a broker dealer,
mhm.
right? An issuer isn't a broker dealer.
No.
A person, now remember, person doesn't necessarily mean living, breathing human being. State Farm is a unnatural person. So a person with no office in the state who directs offers to no more than 5 individual residents of the state. There is no de minimis for broker dealers.
If they transact it, then they
That's
have
right.
to
So if it's
be
at
it.
one, if they had
Yeah.
one individual resident, they need to register. So here, what Kaplan's trying to do is cloud your mind and say, oh, it's de minimis. There is no de minimis for broker dealers. A broker dealer has an office in the state. Broker dealer has a retail client in the state. They need to register. No
And
office, no retail client, no register.
the de minimis is just a IA state and an
That's
IAR state, right?
that's exactly right. That's
Okay.
exactly right. Economists have determined that the economy is slowing down. So it sounds like this is going to be a business cycle question. Orders for durable goods have been declining. Durable goods are like refrigerators, washers, dryers, things that people don't actually buy that often, right? Every maybe 3, 5 years, you go get a new washer or dryer or whatever.
Mhm.
And unemployment. So unemployment has been declining kind of weird. While not a reason for concern, it has been steadily increasing over the past year. Given the information provided, what phase of the business cycle is the economy currently experiencing?
So my 5-year-old little boy helps me remember this. He says
Uh,
every pony can trot. EPCT
every pony can try.
can trot. Yeah.
What does that mean? Yeah, what do
It, he just likes animals. I said, Henry, I cannot remember this. And he was like,
you,
EPCT. And I'm like,
he's got to remember.
expansion, peak, contraction, and drop. It'll
Oh,
work.
I
Throw
love it. I love
recovery
it.
at the
I love it.
bottom.
I mean, well, I got two things I can steal from you.
That's
Every
right.
pony can.
Can trot.
I love it.
Yep.
Man, that's
Yep.
pretty cool.
And he
How
says,
old is he?
he's 5, and he says, "And the pony goes up the hill, mommy." I said, "That's
What?
right."
Yeah, I tell you what, the kid may be a genius. That's pretty
Yeah,
good. 5 years old,
because
make a
peak
connection.
is at the top, and that's when things are as good as it's gonna
Uh, man, that's something. You got a kind of
get.
impressive 5-year-old. He's a prodigy.
He cusses too, so that's not a good thing.
That's great. Well, it could be a challenge, right? When you have a smart kid, he's sometimes going to be a bigger supervisory challenge for you, right?
Yes, he's like a hostage negotiator when you tell him no. No just means come at it from a different angle.
It is a violation of the Uniform Securities Act. The agent is you. That's your 6 or your 7, right? I think it's 6 if you're taking the 65.
Mhm.
Violation of the Uniform of an Agent 2.
Okay. So D, I know they could do it because it could be unsolicited.
That's right.
So a material representation that's out because they can.
Yeah, that you're supposed to do that, right?
So
Make any material representation. I say, hey, listen, it might alter your decision, but something ought to know. So, hey, that's bueno. You're supposed to do that.
so
What would be the violation is omission of a material fact.
I'm torn between B and C because I know I'm
Correct.
thinking that B would just be unethical.
Well, no, B, you listen, if you want to team up with a State Farm agent and split commissions, that's up to State Farm and you. There's no problem with that. You
Don't I have to disclose it to the client
Well, you
though?
do have to, no, you don't have to disclose how you're
Oh,
splitting commissions or any of that. That's not unethical, right? So,
oh,
you probably should tell them. I mean, but there's no rules against that, right? Say, hey, if I'm
mhm.
out of the office, Dean and I work as a team, and you just feel free to talk to Dean about it, right? But it's
Okay.
necessary that we tell you that we're working as a team. The thing, by the way, even if you were struggling between B and C, then you got to use your judgment and say, what's a bigger deal? I'm splitting commissions with a State Farm agent and a customer doesn't know, or I filed a fraudulent application. I filled out a U4. It didn't say I was a convicted felon.
Okay. And then when I see the word fraud, I just think, yeah, it's got to be that.
Yeah, that's the big one, man. I
Yeah.
always joke it's very difficult for you to go to jail in the securities industry, but this one way you could end up in prison is making a fraudulent, distribution, fraudulent, your point, willful intent to deceive is what fraud is.
Yep. State Farm tells us don't falsify documents and don't take money. We'll talk about everything else.
Yeah. Yeah. They got a boy, I can't tell you how many people get in trouble for that because sometimes by the way, and it's stupid because, they just, you don't think ahead about, putting a fraudulent signature on there. And my mom worked in the automobile industry and they had a term for it. And then what they would do is say, just farb the paperwork.
Mhm.
Farb was the code word for, we're not tracking down this person. So just,
Yeah,
And boy, it's never a problem till it's a problem, right?
that's
The
right.
bucket I used to say is it could be a problem, is a problem, never be a problem. And State Farm's right. If you never do it, it's never a problem.
That's right.
Could be a problem,
There's
you know.
there's certain things they just don't want to come talk to you about. You're just gonna lose your job.
Yeah, well, and I'm with them. I kind of get it because life is too short, right? We don't want to have to worry about it. And you
That's
can remember the
exactly.
damage to the brand. I mean, people you can spend millions on that. We joke with Jake, right? You don't want to have then somebody who's wrecking all their advertising and marketing. You got to be a little more careful, right? That we don't put
Mhm.
a sheep in wolf's clothing at State
Yeah.
Farm because they'd be able to do
Eh,
more damage than they could elsewhere because people already kind of say, well. Star's got to be okay. I don't think Star Farm would put her out here if she wasn't, ethical. A
That's
pension
right.
plan administrator hires an investment advisor to oversee investment decisions of the plan. The advisor's primary responsibility is to which of the following?
Okay. Pension plan administers to the plan. I think.
So they're asking you, who are you a fiduciary to? Are you a fiduciary to the plan sponsor, the pension plan administrator, the plan, the advisory firm?
think it's A.
It's actually not the sponsor of the plan. That would be like the employer.
Oh,
Plan,
okay.
it's the plan itself, right?
The plan itself. Okay.
Plan sponsor would be in this case like the employer who's offering this pension plan to their employees.
I
And
got
it's
to
like,
get
"Hey,
those
Dean,
right
you're my,
because
yeah, well, you say, you Dean, you're my fiduciary. I go, well, I'm sorry, I'm not your fiduciary, XYZ Inc. I'm a fiduciary to the plan itself.
I got to get those. Those are free ones.
Well, that's why we practice. That's why we practice. It's like learning a foreign language, right? And a lot of legalese. And now if you want the takeaway from this particular question is plan sponsor would be the employer,
Okay.
right? And you're not a fiduciary to, Chrysler. I joke when mom goes to our senior centers, some of them well, almost all of them are retired. And one of my favorite guys is a guy named Al, and he's retired from Chrysler.
Mm.
And he has a defined benefit pension plan. And Chrysler, I was teasing him. I said, "Man, your CEO, it seems like nobody loves him. The shareholders don't like this guy. The employees, the union doesn't like this guy. The dealer network doesn't like this guy." I said, "Man, I don't know how long he's going to be around if he doesn't have anybody who really cares for him." And he basically, one of the things he was upset, the guy was getting upset with the dealer network, is he wouldn't let him, get rid of the cars. He wanted full margin on these Dodge Rams and Jeeps, and the dealers are like, "Hey, we got to move this stuff off the lot. So
Mhm.
let's make it up in volume." Anyways, long story short, I said, "Well, how do you feel about your pension plan?" And he said, "Well, Dean, I'm not worried at all about my pension plan because my pension plan is through the UAW and not through Chrysler." Well,
Mm.
here's again, again, if I am UAW guy managing those funds, tens of billions of dollars, my fiduciary relationship isn't with Chrysler. It's with the plan, and even not the UAW, right? So one of the UAW guys tells me to do something, I said, "Well, listen, I don't represent you. I represent the plan."
Gotcha.
And I just have my UPS. I told you I'm demented, so I live off grid now, and boy, UPS is really important to me because that's my connection to the the infrastructure to the grid because I'm off grid. And anyways, he's a cover driver. He told me that he's not my normal guy, Kevin. And I said, "Well, what's up with Kevin?" And, he told me he has a health issue, and so until further notice, he's my guy. I'm a cover driver. And I said, "Well, are you still a Teamster?" He goes, "Oh yeah, yeah, I'm a Teamster." I go, "Okay, cool. I want to make sure union's strong."
That's right.
An employee wishing to obtain long-term capital gain treatment would and prefer the employer to offer. I like this question.
Ooh, I don't.
Yeah,
Let's
this is
see.
one of those low probability ones that certainly.
Wow. Okay. Long-term capital gain. So that, okay. So I know that, ooh, I do. Let's see.
So there's no such thing, by the way. Well, it says employer, so we can toss out A because you don't get Apple calls and puts from Apple, right? So you work at
Mhm.
Apple. And we know that Apple is not going to give you portable stock options that you get to take with you if you leave Apple and go to work at Google. So C is that.
Mhm.
So it is testable to know the difference between non-qualified stock options in terms of tax treatment, incentive stock options. You know, the incentive stock options, when you receive them and when they're vested, you don't actually owe taxes until you actually sell the stock. In a non-qualified stock option, when you are vested, it's actually considered part of your compensation and you owe taxes on that. You know, Elon received non-qualified stock options to buy Tesla at $9 a share. And when he was vested, Tesla was $540. You know, those options, we consider him to have just been received from Tesla, the difference between 540 minus 9, $531 per share in ordinary income, and he owes taxes. You know, he had to end up selling $9 billion worth of Tesla to pay the tax. If he had received instead incentive stock options instead of non-qualified, what would have happened is when he was vested, there would be no tax until he actually sold the Tesla stock of his own free will and accord, not because of it. So the only test question here when it shows up is to know that incentive stock options are going to have better tax and capital gain rather than ordinary income. Right. So the takeaway is that you would much rather have a long-term rate. There's going to be taxed at ordinary income upon being vested. And this is potentially a long-term capital gain, depending on how long you own the stock after you exercise.
Is this and I'm drawn to this, is this the part where I think the way it was put to me, if I'm thinking of the right thing, is one benefits the employee and one benefits the employer. So it's used to target
Yeah, well, that's
higher.
true. That is true. I don't think that's how they're going to test on, but
Right.
absolutely, right?
Okay.
Non-qualified stock option, they're going to deduct that as part of their compensation expense to you. So that is true. So B would benefit the employer more than D would.
Okay.
Because we can remember that what's going to happen with B is they're going to make you exercise, right? And that when he exercises, he's buying stock in Tesla, and so they're receiving the proceeds. So excellent.
Okay.
One of your customers notices that the short interest in the Capco common stock is quite high. So lots of people have sold it short. When she asks you for an interpretation, you should tell her that this signals.
So I know when you're short a stock, you would buy a call.
Well, there's no one here buying a call. So even if you
Oh,
thought that was the right answer, it's
let's
not
see.
available to you, right? So when the answer you want is not available, then we got to start over and say, okay, well, let me see what is available to me. And that answer is not available.
Short interest on calls. I think it means they're bearish. It's a
Yeah,
bearish
this is
outlook.
that's why I told you it's counterintuitive. So this is called, there's a couple technical theories you're held accountable for, and there's 65. One technical theory you're held accountable for is called short interest theory. Not truth. Theory is never truth. It's just a way of explaining things. And all those people are short eventually have to buy to cover. And so we know there's all these future buyers out there. And you say, well, Dean, it sounds like you're pretty excited about there's a lot of short interest in the stock. I say, well, I am because they represent future buyers. Those people who are short can accelerate a bullish trend because if the stock goes up and it breaks through its resistance line, the resistance line, those people are going to get maintenance calls and they're going to have to buy the stock. That could accelerate the bullish trend. So it's counterintuitive, but it's actually a bullish indicator. So short interest theory says that short interest is a positive or bullish thing because it represents future buyers. Now, I got a couple questions for you. The other theory you're held accountable for, technical theory, there's a couple questions when you're 65 about this. Another test question about this is another technical theory called odd lot trading theory.
Doing the opposite.
That's right. And the odd lotters who can't afford to buy 100 shares are the dumb money, and we should do the opposite. So that's another trading theory you're held accountable for. Odd lot trading, odd lot theory, short interest theory. And now there's also test questions that some people don't think technical analysis works, that it's a waste of time and resources to be using technical theory. And this would be the weak form of the efficient market hypothesis.
As the public and the private information and
There you go, right? Weak
okay.
form technical analysis. That's exactly right. So in the weak form, technical analysis does not work. Now, if you go with a weak form, you'll be better able to defend yourself when somebody says, hey, well, how do you explain Warren Buffett beating the market historically? And you say, well, I believe in the weak form of the efficient market hypothesis. So that does make room for somebody using fundamental analysis to beat the market. So weak form technical analysis doesn't work, but maybe fundamental analysis does. Now, every time we go up, the bucket gets bigger. So it would include the last bucket. Semi-strong says Mr. Buffett doesn't exist, that fundamental analysis doesn't work, technical analysis doesn't work. And it sounds like you have reviewed this because material non-public information would work. And again, if you have a hypothesis, it's easier to defend it if you don't go to the extreme. But the strong form is nothing works. And the professor came up with this. You can't beat the market. You would say here that you don't believe in alpha, right? You say, Dean, I don't think there's excess returns in the marketplace. There is no alpha. Now, that doesn't mean we're not going to make a recommendation to you. We're going to make a recommendation of an index fund. You say, Dean, I'm just willing to accepting market-based return. I want a low cost structure, right? I don't want to be buying and selling securities. We have something for everybody, basically.
Okay.
An investment advisor is required to disclose to a client the amount of compensation received from which of the following third parties. So the investment advisory firm is required to disclose compensation from which of these third parties?
I think it's D, all three.
Yeah, absolutely. If you're getting paid, you know, I've told my mom I'm suspicious of this person who's trying to sell her some magical cream that she puts on her knee. And I said, well, Mom, it's a huge red flag that she tells you that she's not doing this for money.
Yeah.
To me, that's a red flag. I mean, she has to be compensated in some way. I mean, if we wanted to help her out, we'd say, listen, you need a better answer for that because it's, I got to tell you, I'm getting compensated from all sources.
Mm-hmm.
And which of these business entity does the member refer to the owners? Again, this answer set is very testable.
So if it's a member, is it that limited liability corporation company?
That's exactly right. And remember, one of the differences between a limited liability, that's the key phrase there, is that the managing member of an LLC does not have unlimited risk, whereas a general partner in a partnership does. So in a limited partnership, we're going to have limited partners and general partners, and that general partner is going to do that. I love this answer set. So let's just play with this answer set. This answer set is very testable. Someday I'm going to write a practice exam that just is answer sets with no questions.
Oh, that'd be great.
Depending on what the question is, depends on the answer. If I said, which of these business structures, business entities, forms of business ownership does not allow for non-resident alien shareholders?
It's gonna be, is it this?
S corp.
S corp, that's right.
Which one of these business structures, business entity forms of ownership has a maximum of 100 shareholders?
S corp.
Right on. Which of these is the easiest to form and easiest to dissolve?
Oh, proprietorship.
Right on. Now, the one that's not there is a C corp, and we should know that one too.
double taxed.
That's an investment advisor is looking for a suitable investment for a client. The IAR wishes to find something that will offer an attractive return commensurate with systematic risk. Systematic risk is risks in the system, risks in the marketplace. So I think of it when bad things happen to good stocks. The choices have been narrowed to Security C and Security L, and the selection will be based on alpha. C has a beta of 1 and has earned 13%. Now, I don't really care about this question, to be honest with you, as your tutor. What I do care about is what they love to do on the test is give you a stalking horse. And so when they say that C has a beta 1, that means that that's the market return. So we have to kind of, as a detective, figure out, okay, now they tell me 13%. So that means the market return was 13%. With its equal to its expected, which equaled its expected return. Well, Security L has a beta of 8. Now, again, I don't think you're going to have to do this math, but that means it's 80% as volatile as the market. And the key here would be that in an up market, it's going to underperform. Market goes up 13%. It's only going up 80% of that. When the market goes down, it's going to outperform because it's not going to go down as much. Right? So it says had a beta of 8 and earn. The alpha for Security L is. Now, I don't think you're ever going to have to calculate alpha on the test. I do think you need to know that alpha is the excess return over beta.
Actual minus expected, right?
That's right. So,
Okay.
I don't care that we can do the math.
I've never gotten this question right ever because I hate math. And when I see this, I freak out because I see nothing but math.
Well, listen, but good news though. Remember, we said give yourself permission and grace to just guess B, assign it to the universe, and move on.
Mm-hmm.
Right? I don't think you should get too hung up. And by the way, I don't even think you're going to have to do this, right? The only other concept I would throw into this is this idea of you could get some return without hazarding your capital. A client is considering the purchase of ADRs. Definitely get a question on ADR. The client is looking to further diversify her portfolio, which is not a feature of an ADR.
Okay, so I'm
So, you're going to buy, instead of buying Nestle, a Swiss company in the Swiss market, you're going to buy Nestle as an ADR. Instead of buying Heineken in the Dutch market, you're going to buy Heineken as an ADR. Instead of buying Toyota in Japan, you're going to buy, the shares in the Tokyo Stock Exchange, you're going to buy it as an ADR.
I know that it's in US dollars, and so I know
It's
that
true. That is true.
and I know that I've seen it in the past where it said that it is subject to some
Yeah,
type of
that's
risk.
if they're conducting the business in the foreign currency, right? If
Mhm.
Telefonos de Mexico is collecting phone bills in pesos, and it used to take 10 pesos to get a buck, which it did, and now it takes 20 pesos to get a buck, which it does, my dividend got cut in half. Right? I'm going to get paid in dollars, but I'm not going to have as many of them because of the exchange rate of the peso.
Yeah.
Right? So they're not subject to that. So D is agree, do it. Now, why would you buy a foreign security? You're hoping that you have different correlation than the US marketplace, right?
Mhm.
If yield changed by 75 basis points, which of the following bonds would have the greatest price change?
A means it's 4% in which was in 2026.
Remember what the memory aid device for this is?
I do not.
Long and low, baby.
Oh, that's right. That's right. That's
Long
right.
and low, baby.
Yep.
Long and low.
2040 would be my longest one.
There you go. And then you go long and lowest coupon. Boom.
That's right.
Now, what is the fancy word for that?
That is going to be the duration.
Excellent. Just give her that question in your voice. People are going to, yeah, it has longer duration. So we could have asked the same question. If yields change by 75 basis points, which of the following bonds would have the longest duration? It would be the same answer. That's just a
Okay.
fancy word for volatility. Now, just be careful
I got the opposite
Yeah, that's right. I
and
was
I
just gonna
missed it.
say. I
Yeah.
was gonna say, be careful. I was just about to say it. Be careful when they throw you a change up because every once in a while somebody will send me a screenshot. Dean, I used long and low, baby, and I missed it. I go, well, then read the question again. It wasn't. It was asking about. By the way, the opposite here. We would go right short term, and that would be A.
Gotcha.
Right. So I just got to be careful, right?
I learned my lesson on that one.
Well, that's why you got to practice, drill, and rehearse. Which of the following practices are not prohibited under the Uniform Securities Act? So you can do these things.
Let's see. I will get paper and a pen because when I see these, I write 1, 2, 3, and 4 on
I
a piece of
love it. I
paper and
love
mark
it.
them off.
I love that. You're not going to get many multiples on the S exams, maybe 3 or 4, but I love it. Even on ABC day format, I like people who do this on your scratch
Hmm.
paper because remember, what we're asking is not prohibited. So you do that's the other reason I like that because it's very easy to mix up the accept or not true accept. So I just like to read each of them. So on your scratch paper, right? Borrowing money from a customer without the customer's written permission, that is definitely prohibited. So I would have written, so your point if you're doing it, yeah, everybody does a little different, but I would have wrote prohibited.
Hmm. Well, the way I've started doing it is if you can't do it, I mark it out. If you can, I
Yeah.
circle it.
Well, there you go. I like it. So
Hmm.
here now, your point, right? So now we know that that is prohibited, and so one goes out of that. We drop one from the answer set, right? So
Hmm.
we need something. I like it. I like what you're doing. I'm trying to approximate it, but your point, I'm going to get rid of one, right? Because it's saying not prohibited. That means I can get rid of this. Okay, well, and I'm still in here. It
You
looks, by the way, yeah, there we go.
always have to find suitability.
Yeah, failing to determine. So which of the following is not prohibited? Failing to determine suitability. Yeah, it says that is prohibited, right? So we're asking where
Hmm.
something that isn't, so that goes out. And now this goes out and this goes out, right?
Hmm.
Offering the right of rescission. That is not, remember, they're asking me what's not prohibited. And 3 is not prohibited. It looks like Dean went too quick there. That is not prohibited. Telling a customer the past areas does not indicate a future vote. You should certainly do that. So
Hmm.
it's 3 and 4. Excellent.
3 and 4.
Yeah, I love that. I mean, particularly on the grammar. By the way, even if we couldn't do all of them, and so even if we can't do all of them, maybe I read like this one, and maybe I'm not sure, so maybe I put a question mark, but that would still be helpful, right? I say, okay, well, I know
Hmm.
I need to get rid of 1, and not sure about 2, and then sometimes you'll be able to, by process of elimination, actually get it into the right answer.
Hmm.
Mary is a sole proprietor investment advisor. Oh my goodness. Well, Mary is not smart. I mean, this is really, really foolish to be running an investment advisory firm as a sole proprietor. It's a form of business ownership or business structure.
Be living in a box.
Yeah, I mean, boy, this is really not smart. Anyways, registered with the SEC. So that's pretty damn impressive as a sole proprietor that she's a investment advisor. She has assets under management of 100 million or more. I mean, man, Mary, I'm surprised you've got this far in life with a
She
provider.
may
Eight,
not have it long.
yeah, 8 years ago, she was the subject of an SEC investigation. Well, this is why Mary shouldn't be a sole proprietor. I joke this guy Stevie Cohen had an investment advisory firm, and the firm pled to a felony, not him. And my progressive friends are upset because you can't throw an LLC into a prison, but you can certainly throw Mary into prison, right? So
Yeah.
our customers, which result in 5,000 fine. Under the Investment Advisor Act of 1940, Mary's obligation to her clients is due which of these?
Well, it doesn't give me a time frame or anything. So
That's right.
let's see.
Yeah, you kind of sometimes like this, you kind of look at them and say, well, okay, one of these things is quite different than the other. 2 of these things say that she may not have to provide the sunlight.
Well, I know part 2 is what you give to the
Yeah,
customer,
that's
but
right.
that doesn't Oh,
Right.
we must.
So, yeah. So do we give Form ADV Part 2 only if you become a client? No, the whole point of giving it to you is to decide whether you want to become a client, right?
Right.
So I don't give it to you after you become a client. So 2 is out. I make disclosures only if it was in my favor.
No. Yeah,
That's
dude.
discriminatory. So yeah, so it's going to be 1 only, right?
Yeah.
Boom. If the risk-free rate of return was 3.5%, so 3.5% is what you could get without risking your money. The expected market return is 9.5. So this is the way I go about this. There's a lot of ways to do it. Is I just immediately say, kind of like you do with the tax bracket, right? You said, I got that tax bracket, Dean. The minute I see that, I'm going 30 minus the 100. And I do the same thing as it relates to this. I say, well, okay, we really actually got 6 because I say, Starla, we could have got 3.5 without risking our capital. So if the market gives us 9.5, we really only made 6, right? Because we could have got 3.5 without doing anything.
Hmm.
The beta is 1.5. What is the required return? Now, again, I'm not worried about whether you can do the math because the math you're going to have to do is tax equivalent, tax free, total return, working capital. It's not this stuff, but I do like to have a general understanding of input and output. So, what we would have done here is we would have simply taken the 6% times the beta, and what we should be looking at is 11.30. I don't care if you can do the math or not. What I care about is just knowing that this is under the capital asset pricing model. We deduct the risk-free rate of return from that,
Hmm.
right? And then we would then multiply by the beta. I don't, the math is important, the input is.
Gotcha.
By their very nature, pooled investment vehicles offer investors.
They offer investors diversification.
Yeah, you should flunk the entire test if you said say C. I think the screen should just freeze up. You should,
Just till you get in your car.
that's right. Chair shoot you into the ceiling, and we. How did you miss that one? Now, by the way, what risk prevails even if you're diversified? And we should know that when you're diversified, you have avoided non-systematic risk, but you have not avoided systemic risk or systematic risk that you're still exposed to.
Which is the market risk, interest rate, and inflation, right?
Right? That's it. Right. Exactly right.
Okay.
Well, the one thing hedge funds don't do is hedge. Which of the following is not a characteristic of hedge funds? Hedge
they
funds.
they're private and unregistered. I know that.
That's right. Remember, they're sold as private placements, right? And so that means you can only offer hedge funds to accredited investors, and they're privately organized and generally unregistered. That's correct. They're sold through what's called Reg D. And
And I
so,
know they leverage their short positions and cons. I know that that's a part of them.
yeah, that's right. Well, oh, not a characteristic. So Dean
Yeah,
was,
not. Yeah.
there you go. That's true too. Yeah, we're looking for some balls. Yeah, high fees. Yep. Are privately organized is not a characteristic. Reward the portfolio with a high fixed. Well, no, they get a percentage of the profits too, right?
Hmm. Hmm.
What I would know is the definition of an accredited investor, right? To participate, I just told you these are Reg D private placements. And so what would make you an accredited investor and therefore able to invest in this?
Is that I get confused on that and the what to is it one? That's not the 1.1 million.
No, no, yeah. So
No.
the 1.1 is about charging you performance-based compensation. So you're correct that in this hedge fund to have performance-based compensation, that's why the answer is C, because we typically charge 2 and 20. We're charging 20% of the profits that we typically make you. And that would be about whether the client can be charged performance-based compensation. A credit would mean can they accept the invitation to invest, right? So that it would be $1 million net worth, $200,000 in annual income for the last 2 years, expectation of that this year. 300,000 for the last 2 years, 300,000 this year, right? So that's a different
Is,
question.
is that the one that has anything to do with your primary residence, or I get them all confused?
That's exactly right. So
Okay.
it'd be $1 million exclusive of your primary residence, indeed.
Okay.
Be careful. That's all that means, by the way. All it means is you can accept an invitation to a Reg D private placement. That's it. So the doctor is an accredited investor under the Uniform Securities Act, still a retail customer. But
Okay.
all it means is they can get into a private placement.
Okay.
Under ERISA, the Employee Retirement Income Security Act, all the following retirement plans must set standards for vesting, eligibility, and funding, except.
I think it's keto.
Yeah, this is about protecting pension plans offered by your employer, right? And so
Mhm.
a Keogh plan is going to be incorrect because I don't even think Keogh plans exist anymore. But Keogh plans are for self-employed individuals. That part would make you think it's A. But remember, if I have a Keogh plan, I also have to cover any employees I have,
Oh, okay.
right? So that's why it's this one, right? Deferred comp are not qualified plans, therefore not subject to ERISA. And boy, that's going to be bad if something happens and the company that you have millions of dollars in deferred comp goes under. Oh,
Yeah, my mom's a State Farm agent too, and we were just talking. She's got $3 million in deferred comp.
ooh.
So she
Well, good
said
news.
she's,
I think State Farm will be around, but
thank God they made it 100 years.
yeah, I was just gonna say because I've heard horror stories of
Yes.
like your mom and the deferred comp isn't from a State Farm and
Hmm.
something goes south, right? Oh man.
And it's all
I think
over.
mine too. I see so much of that where nowadays where like your mom or whoever it is, dad, mom wants to go home, and then they say, well, who better to entrust my book of business to than my daughter or my son or because the fear you have is that if you even sell your mom sells her book of business, for example, that they might rape, pillage, and burn,
That's why I'm getting this license. So
Yeah.
State Farm can't force us to get the 65, but I have my 6 and 63.
Yeah.
Well, she wants to retire. And if I get my 65, I'll get every bit of her assets under
There you
management, which
go. There
it's
you
like
go.
another $180,000 a year. I'd be a fool not to
I
do it.
was going to say there's a very powerful incentive. I joke there's two great motivators, fear and greed. Like
That's right.
how many people
That's
are
right.
taking a 65 and say, hey, Dean, the other situation I see a lot is not even relatives, is where somebody in the office is referring the business that they can't do because they don't have a 65 to somebody else in the office. And they finally get tired and say, I got to go get this done because I can't be, handing money to people,
Yes.
I think though, just as a empathy thing, I think sometimes it's a bigger challenge when that is the case because it's not like your business is as private as it would be perhaps if you were starting out brand new in State Farm and nobody knows you. When people know your mom is a producer, it's kind of like, oh, a little more pressure.
Oh, and second place is still first place loser to her. So
Yeah,
you got to get
there you go.
it.
Securities regulators have taken a strong position on the need for registered broker dealers to disclose fees they charge. Which of these are among the most common ways for making this disclosures?
Think it's all of them.
Yeah, right on. More importantly, how many days in advance do you have to give customers a head up that you're changing your fees?
30 days.
Right on, 30 days, indeed. An investment advisor is servicing a group of physicians and will offer a discounted fee to the doctors in that particular partnership. In what way would this be considered ethical?
Fees. Would it be C
Uh,
or A?
it's actually B. We have to,
Oh,
they individually could decide to negotiate if they wanted to, right? In other words, we say that if you can negotiate, we tell you in the Form ADV, the disclosure document, that our fees are negotiable.
oh, okay.
So that's telling the other doctors they don't have to go along for this ride if they don't want to.
Okay.
When making recommendations to an advisory client, which of the following carry the most weight?
Great. So,
I think these ones are challenging because, it's one of those judgment questions.
yes. So they're not wanting me to rank them. I had one where it wanted me to rank them.
Yeah,
So
yes,
let's see.
most weight. So, by the way, we know we got to pick two, right?
Yeah. So let's see. I know risk tolerance is one of them for sure.
There we go. So that means it's either C or D.
The client's investment proposal. Is three, number three, or yeah, C,
There
one
you
and
go.
three.
Exactly right. You are correct. In a direct participation program, I like to, spell out the acronyms when they give me as a test taker. And,
Mm-hmm.
to be honest with you too, I mean, I'm being not being facetious. Like when I'm taking a test, I like to read the questions out loud. So,
I
some
do too.
now direct participation with the general partner, all the following except, and then, at the Prometric site, they say, Mr. Tinney, other people are trying to take the test. Well, I don't care about them. Look at this questionnaire about this partnership I'm on right now.
That's right.
And, you want to kind of, as much as you can, stay actively engaged as you're, working your way through your performance opportunities. All right. So is all the following except?
Mm, okay. So I know the general partner makes the decisions,
That's right. I'm the one managing the business day to day for sure.
and I think it's B because I think they do have the
Yes,
limited partner is the one that has less.
that's exactly right. Somebody asks you to be a general partner. You go, ooh, no, no, thank you. I don't want to have all that risk.
Mm-hmm.
Because a trust account is managed for the beneficial interest of the beneficiary, the investment advisor representative can.
Let's see. Mhm. I know it's A.
Yeah, right.
Yeah.
Again, you can't make a check payable because you deserve more money, right? It's,
Yeah, I know.
according to Investment Advisor Act of 1940, which of the following statements regarding registration of investment advisors is true?
So if you're federally registered, you don't automatically
Uh,
have to be state
that's right.
registered.
You never register with both. It's one
Mm-mm.
or the other.
So neither.
Right on. I like that one. Kind of weird, kind of ass backwards way to ask it.
Yeah, yeah.
Absolutely testable. All right. Well, we are at question 39. When we're doing these practice files, it just depends how long they take because we'd like to chat and do everything like that. So just like the real test, give yourself, a break, maybe every 30 questions, 40 questions. We're 90 minutes in. So we're going to take a 15-minute break. We'll come back,
Okay.
pick it up, same thing. If we go over another 90 minutes, we'll take another break and just gather yourself. Sometimes when people get high scores and barely miss their mark, I sometimes think it's because they just get tired. And I know when I get tired, my reading skills are greatly diminished. And now I'm coming down in the back part of this exam and I'm not at my mental best. So I like to say every 30, 40 questions, take a little mental trip to Tahiti. Oh, gather yourself, come back and do some more. All right.
Okay.
Any questions about that?
Am I good on time? Time has been an issue with me on the as far as
Well,
test
we're going to be
taking.
able to practice during the rehearse. I think we're doing fine on time because
Okay.
we are chatting a lot, and so I
Okay.
don't feel like you're taking. If I thought you did have a time constraint, what I would do is say, listen, you're taking too long to squeeze the trigger. And
Okay.
so I haven't felt that, but if you recognize that that's the key, right? Next time
Hmm.
you're doing one on your own, just make sure you set that clock.
Okay.
And I had a guy who was having a time constraint, and he was talking about his scores. I said, well, we can't talk about scores until you can get these done in the time allocated. So,
Yeah.
geez, the next one, I don't care what your score is, just finish it in the time allocated, right? Then
Yeah.
then we can work on this. But I
Okay.
haven't felt that you're taking too long to squeeze the trigger.
Okay. Okay,
Okay, all
good.
right. I'll see you
Okay.
in 15.
Okay. Thanks, Dean.
All right, back to work we go.
Yes, sir. I
Which of the following statements concerning international direct investing is correct?
think it's B.
I'm sorry.
It B?
B is in boy or D is in dog?
Hold on. Let's see. Well, I'm torn between B and D. I
Yeah, when
know that foreign and international or foreign invest, is
the
that what they're
addition,
talking about?
let's see. Yeah, it says B. The addition of foreign securities to a portfolio may result in increased portfolio risk due to the different movements of foreign markets and U.S. markets.
No, it's D.
Yeah. The information which of the following statements concerning is true. It's D,
D. I'm
right?
getting it confused with opposite correlation.
Yeah, that's right.
Yeah.
Yeah, this could have been the right answer to a different question,
Yeah.
right? That would have been your point about different correlation to U.S. Securities.
Mhm.
What is the purpose of the Securities Act of 1934?
Okay, so that was 33 is the first, 34 is
Yeah.
when they,
33 is prospectuses, paper, and 34 is people and places.
so it's either A or B. I think it's
Correct. It is either A or B.
I
You know, you got to decide, is it about policy? Does the SEC tell people, give them policies, or they tell them not to do things?
SEC gives them, well, both, but I guess the policy tells them what they can and can't do.
Yeah,
So A.
right on. I joke if they say the SEC's on line one and I pick it up, they say, Dean, do you know who we are? And I say, yeah, you have primary jurisdiction, interpretation, and enforcement of the domestic securities laws of the United States of America and can throw me in jail. I get along fine just as long as you remember that. All right, the dollar weakens. Which of the following statements is true?
So I know if the dollar is weak, that exports are up and imports are down.
Yeah, that's true.
So let's see.
So A is out.
And let's see. So if the dollar is weak, it will not buy more foreign currency.
That's exactly right. It's the opposite.
And
I
let's
like it. So by
see.
process of elimination, you got rid of A and C. And so now, as a good test taker, you're down to a 50-50, which is better than 1 and 4. So
Well, I think that's a really bad way to say that the the other country's money is going to be less worth less.
yeah, it's an
Like,
inverse relationship. So you got it right
yeah,
by process of elimination, right?
yeah, D.
If the U.S. Treasury bonds pay more foreign investors like buying them.
Mhm.
Which along is not a type of diversification that is achieved in investing in international equities. I kind of like it, kind of a high-end judgment question, but
So let's see, international. So I've never even heard of style. Is that a thing? I've never heard that.
a style, yeah, style is I call it style drift, So
Mm.
um, Brian Marks of Knopf and Marks, I think they're a fine test prep vendor. However, now they're starting to do, courses in leadership and, getaways for teams, and I call that style drift. Right. In other
Okay.
words, they're, doing something that that's not really what their core competence is, right? I,
Getting out of their lane.
yeah, I joke about staying in my lane. I don't want to confuse Google's traffic signals on YouTube, so I'm really conscious of not doing this. So I tease Ken Finnan that he wants to be the Tony Robbins of training, and he does lots of like, don't give up, and he does these motivational videos, and I tell people, yeah, I wouldn't do that because to me it would be style drift, right? All of a sudden,
Yes.
Dean's you pop on and Dean's making a video about, you know, uh, something that isn't related to taking the test.
Well, the thing I've always liked about you is you just tell it like it is, and there's a lot for that.
Yeah, yeah. So this is, yeah, this would, the answer is style,
Mhm.
not a type of diversification, right? You are getting currency diversification, you are getting a different asset class, and you're getting geographic. Because of decline in sales revenue, by the way, this is I would accuse my friends at Franklin Templeton, as much as I love them, of style drift, right? They're starting to buy other asset managers, and Franklin has always been noted for being a bond kind of a place,
Mm.
and an international kind of a place. Franklin, the bond side, Templeton, the foreign. Now they're buying these other things. I'm like, I get it. I'm not so sure you want to be all things to all people, right? Because of the decline in sales revenue, a company has forecast earning growth of 25%, now forecasts only 12%. This is an example of what type of risk in the investment of securities.
Sales revenue went down, and they were supposed to do well, but now they're not. So let's see.
Now, whose fault is this? It's their own, right?
Their own fault. Yes. So it would be business risk.
Yeah. Also known as selection risk. Hopefully you were diversified, right? It's
Mm.
not purchasing power risk. It's not the market as a whole. It's not interest rates. So it's business risk. Formula methods of investing involve selling equities in rising markets and buying them in falling markets would include. Kind of interesting.
Yeah. Okay. So just immediately what I go to is the dollar cost averaging is putting the same amount of
Yeah,
money in over and
exactly.
over.
You are on
Mm.
the right track. So you need one. So that means it's either B or D because you are right. Or excuse me, it's three is right. So it's either A or C. We should definitely know what makes dollar cost averaging work. Fixed dollars invested regularly. What's the end result? You end up having a lower average cost of the underlying shares because you're doing exactly what you should be doing, buying more when they're low and less when they're high. And it doesn't guarantee a profit. So three is certainly true.
Mhm. Let's see. Um, either one of
Formula methods of investing that involve selling. So that's why we got to be careful selling equities. So we're not just buying them, we're also selling them. So we're
mm,
repositioning or rebalancing our portfolio and buying them in falling markets. So this is not dollar cost averaging because it says we're actually selling. And dollar cost averaging, all we're doing is buying. So it's going to be now elimination of Roman numeral three. And so now we got to decide a constant dollar plan or a drip. I kind of funky phraseology on this one. It's actually one and two. I wouldn't worry at all about this on the test. I would definitely
mhm.
worry about dollar cost averaging, and then I would definitely know about a drip. Do you know what drips are?
I have no clue. No.
Drips are dividend reinvestment programs. So in a mutual fund, you say, "Hey, I don't need the dividends and capital gains distributions. Do you have a drip available? Does your mutual fund have a dividend reinvestment program?" Now, the test question about a dividend reinvestment program, as far as the IRS is concerned, if you had the choice to get the money and you choose not to, that's still taxable. So when you reinvest dividends and capital gains at a mutual fund, it's still taxable even though you're reinvesting. The mechanism for that is participating in what's called a DRIP, a dividend
Okay.
reinvestment program at the mutual fund.
Okay.
Which of the following statements regarding the growth style of investing is true? So as a test taker on 65, you got to be able to contrast value investing with growth investing.
Growth investing is it's they have a lot of capital in it,
Hmm.
and that it'll it's a high profit earning.
Yeah, I think when I think of growth right now in our marketplace, I would be thinking like Nvidia. Oh my God, their earnings and So growth managers focus on the denominator in the PE ratio, searching for firms in industry where high expecting earnings growth, because the stock market's all about earnings or future expectations over earnings, will drive the strike price up even higher. So I would be willing to pay a higher PE for a company where the earnings were growing. Sounds pretty good. Growth
Mhm.
managers look for a high dividend. And
No.
that's a value investor. Growth managers focus on the numerator in the PE, desiring a lower stock price, a lower PE, or a price to book. And C is value
Mhm.
investors. D, growth managers believe that although a firm's earnings are depressed now, the earnings will rise in the future and revert to that's value. So B, C, and D are value. And this one is A. You will be asked to distinguish between that, right?
Yes.
You know, it sounds like your 5-year-old son is a serious growth opportunity.
That's right.
That young man could end up being something else if he's coming up with, mnemonic devices for mom 65 at age 5. Woo! Growth stock.
He's just tired of me being at the office all the time studying.
Yeah. I always think it's good when moms model that kind of behavior for their kids, right? It's just reading, man, it's scary reading the stuff that, people don't know how to read anymore.
Oh, and don't write in cursive.
Yeah. Oh, I even thought of that. Or reviewing nationwide industrial production figures. An analyst notices that inventories have been rising. Well, that doesn't sound bueno. From that information, one would gather that the economy is most likely in which phase of the business cycle?
So if inventory is rising, then that means that it's starting to go down.
Right on.
Um, so let's see. It wouldn't be. It wouldn't. I think it's gonna either gonna be because I think it starts to go down at peak, but then contraction, it's really down.
Yeah. So it
So,
says, and also notice inventories have been rising. So is it already
oh,
on?
rising. Yeah, going up. So things are getting bad.
There you go. Right. Contraction. You had it right.
Yeah.
Yeah. It's getting bad. So I think whatever you're doing is pretty good because you're not fumbling around as much as most people do on these business cycle questions. So pretty good.
Okay.
Uh, it is generally accepted that agents, that's you with a 6, and investment advisor reps, that's you with a 65, will give greater consideration to which of the following when making recommendations to their senior clients.
It's gonna one of those answers has to be life stage
Right on.
and form between 1 and 3 because kind of one is kind of like two.
Yeah, I'm with you. And what's a better thing? Because I know some people who are different ages, same age, but are different life stages.
Yes.
So I don't think
So
what I'm saying is I probably wouldn't throw in 1 because I already said 2.
2 and 3.
Excellent. Excellent. Right.
Mm-hmm.
We're not worried about their having enough savings to get them through retirement, right?
Mm-hmm.
Analysis observes that the beta of a security is 1.3, the market return is 6, tax-free, risk-free is 1. So I told you what I like to do immediately is just take 1 from 6 and say 5. The analyst forecasts the security will return 7% over the next year. Based on these assumptions, the security is. And again, I don't care if you can do this math or not. What we're trying to come up with is it undervalued or overvalued?
See, so 5 and 7.
Yeah. So again, what we would do is take the risk-free rate of return and just take it back out, right? And then we would take 1.3 times the market return. Market return is 6, right? But remember, we took out 1. And then if we did all that math, we would find out it's overvalued because it exceeds the forecasted return, right? So I wouldn't worry about doing any of that math. All I want you to know is this. I want you to know that risk-free is what we get for not risking our capital. And so 1 minus that is 5. I don't care if you can comp the numbers, but what I want you to know is what's involved in this. You need to know the beta, you need to know the market return, and you need to know risk-free because what they love is the accept format. All
Mm-hmm.
the following would be under cap M. required except, and they give you something that isn't part of Cat M. The one they love to give you is something like alpha. That is another one that's solving this thing.
I've gotten that exact question.
There you go. Which of the following statements regarding American depository receipts are true? Very
All
much
right.
a test question.
So with ADRs, let's see. History. I, I'm almost positive the dividends are received in American currency.
You are exactly right. So two goes poof.
Mhm. And they will have foreign current, well, they would still have foreign currency risk. It's just
I know.
denominated in US dollars.
You
So
are correct.
receipts are issued by funds. So 1 in 4 securities or vehicles used to facilitate US trading. Well, they're American depository receipts, so is it? Is I think 4 is the right.
It is.
I
It is.
think it is.
It is.
Okay. So true. So what's true then is um 4
One and
and
three so far. One are, and three are true, but the receipts are not issued by the foreign branch, but that's where the securities are being held. So that's kind of a tricky one.
uh
Receipts are issued by the domestic bank. The securities are being held in the foreign branch. So one and three, you're pretty good squared away on one and three. Pretty good job.
yeah. Okay.
The primary function of the Federal Reserve Board is this is very testable. Fiscal policy versus monetary policy.
Yeah, so the Federal Reserve Board does the monetary, fiscal is done by the President and Congress.
Very testable, right?
Okay.
And then the Federal Reserve Board, remember, has two missions in monetary policy. The two missions are price stability mandates, price stability, price equilibrium, and full employment. And then you get tested on their tools, right? And you were absolutely right. Fiscal policy is government spending and taxation. And you do get held accountable for demand side economics. And I'm interested to see how this is going to play out as a voyeur, but right now, fiscal policy, government spending and taxation, if we do lay off 100,000 federal workers, oh, you know,
Yeah.
that's going to suck a lot of demand out of the economy because these people aren't getting paychecks anymore. Lord John Maynard Keynes, the founder of demand side economics, said that fiscal policy can be used to even out the business cycle. Because when the
Mhm.
business cycle is weak, it's because there's no demand. So the government can step on the accelerator called government spending. The antithesis of that is supply side, where we're asking to use fiscal policy. This would be, Doge and President Trump trying to create an environment where, by cutting taxes that, people can, make better decisions about perhaps than the government. But not whether right or wrong. It's just theory, right?
Mhm.
A client invests 2,200 in an open-end investment company, signs a letter of intent for 10,000. Very testable. Letter of intents are good for 13 months, can be backdated 60 days. If 6 months later, so he's within his letter of intent, he deposits 11,000. So which of the following statements is true?
Mm. I've never had this. I mean, I know about it, but I've never had this specific. I know that he will get a reduced, or wait, you get it up front, don't you?
Yeah. He fulfilled his letter of intent, right? He got the reduced sales charge on the 2,200. So which of the following statements is true? No, he gets a reduced load. A is not true. He will
Mhm.
receive, yeah, he gets it on the entire amount, right? Because he got it
Yeah.
up front. So it gets it on everything. Boom.
And if you don't get it, they take it back out of escrow to
Can't
make
be
it
hurt.
right.
That's exactly right. Can't be
Okay.
hurt. So if there's any doubt, you got to fill it out. Wade Kemmons purchased 200 shares of ABC common stock on March 2009. So Anytime they give me a date, it's kind of like your 30% tax bracket thing. I go, I got to check the other date. I just like to check that immediately. And it says on July 2016, he gives it to his niece. Okay. So this is very testable. There's two scenarios. Either he is dead and his niece, Kendra, inherited these securities. Not true. Or he gifts them to his niece, Kendra. Here he's still alive. So Kendra is going to assume his cost base. So
And if
his
he's
cost base,
dead, it's the day he dies, right?
that's right, exactly right. And the date he dies, it said he died on July 27th. Then Kendra's cost base is 89.
Okay.
Right. So again, we're not going to make you do the math here, but basically what you need to do is exactly that. You got to know whether in the gift situation, Kendra assumes the cost base, and in a death situation, there's a step up in the basis, right? So if we did the math, we would find out this is a long-term capital gain. That would give us a 1 in 3 chance. The 518 is just there to mess you up. If we did the math, we'd find out that's 10,600.
Okay.
But make sure you know the distinction, the step up versus assuming the cost basis. The one thing I like, they got two of these on the test, and it's a grandma and a granddaughter. And I always joke, I don't know why on NAS exams they like killing grandmas. I mean, it says grandma's passed on, and Kendra gets the stock. Which of the following reasons is an appropriate justification for selling a stock short?
Oh, another option. Let's see. Okay, so if you're short, you are if you're short, you've sold it, right?
Mhm.
I think so. Benefit, I just kind of guess on these because I honestly, I
Well,
say D.
let's do a test taking trick. Yeah.
Okay.
Now, I'm not suggesting you're going to pass the 65 with tricks. However, when all else fails, this is called the principle of mutual exclusion. And when
Okay.
I have as a test taker two answers that are opposites, it's got to be one of those two answers because I can't leave them in the same answer set. They can't be both true in the same universe.
Ah, okay.
So, for example, Socrates is a dog. Socrates is a philosopher. He's either a dog or a philosopher. He can't be both, right?
Hmm.
So I, as a test taker, is when I get two opposites, say, okay, thank you so much. I think I got a 50-50 here, right? So it's either a rise or decline. You sell short to profit from the stock going down. You probably have heard that saying, don't sell that person short
Hmm.
because they might bite you in the butt and go up instead of going down, right?
Gotcha.
So yeah, when you sell short, you're hoping to profit from a declining stock price. Now, by the way, that would subject you to unlimited risk,
Okay.
right? So it's not a smart thing to do. Mark's company, which is located in Oregon, makes unfinished wood furniture. His company sells his furniture directly to the public from a large warehouse. Okay, so that's Mark. So here it looks like Mark is buying wood. So I think he would be afraid of the price of lumber going up. Let's see.
Yes. So
Teresa's company, located in southern Georgia, grows cotton. So she sells cotton. So I think she's going to be afraid of the price of cotton going down. Which of the following statements correctly identify hedging strategies for Mark and Teresa? So, actually, futures are even easier than options because you either think the price is going up and you go long the futures, you buy the futures, or you think the price is going down and you sell the futures. So,
I
uh,
like these a lot better than the others. I know the consumer locks in cost and the producer sells locks
right,
for the
that's
price.
exactly right. The way I say it is, you do in the futures market today what you're going to do in the cash market later on. The cash market, this is called the spot market. So you are absolutely right on. So Mark is afraid that the price of lumber is going to go up. So if I'm his investment advisor rep, I say, Mark, what we should do is buy some lumber futures. And if the price goes up, what you lose in the cash market, we'll make up some of that in our hedge. We'll buy the lumber futures we hope low and sell them high. Maybe Mark, let's say he's large enough to hire me as his chief financial officer. And he's complaining to me about the price of lumber. And I say, hey, Mark, I did put a hedge in place. You go, what do you mean you put a hedge in place? I said, I bought some lumber futures. And he goes, well, what's that mean? I said, well, listen, we're getting killed in the cash market, but I've got a little profit here in our futures to make up some of that. Right on. The one they like is like jet fuel, right? If I'm Delta,
Okay.
I would go, long the, oil futures, right?
Mm-hmm.
So what's your answer on this one, based on what you told me, which is absolutely correct?
So in this case, mm, the cotton, so they're making, or so the shirt. So Mark he needs the lumber. So he's finished wood, so he sells his furniture directly to the public. So let's see. So Mark should lock in the
There you go, right?
cost of lumber
So you're going to do in the futures market
and
today
buy. Mm-hmm.
what you're doing in the cash market later on,
And
right? So
yep.
Mark is going to be buying lumber, right?
And she is
He's going to be selling
she's the
cotton.
cotton seller. Yep. So 1 and 2.
Excellent. That's exactly right. Now, I don't think on the test they're going to give you Mark and Teresa in the same question, right? But,
Yeah.
the point is just what you said, right? You said it absolutely correct. Those are derivatives. Those go with your options on the test. Which of the following circumstances may attorneys and accountants claim an exclusion from registering as an investment advisor?
Okay. So under that, I tend to think about the late, the
That's exactly right, right? Lawyers, accountants, teachers, engineers, you're on the
Mhm.
exact right track. And then you got to remember one of these, we have some pivot words, hints like immaterial, non-public information, immaterial, so there's certain words that are very important as a test taker, solely clerical in nature, for example.
So they're wanting to know what the
So
claim.
under what situations can attorneys and accountants say they are excluded and don't need to be registered if the investment advice they give is,
It has to be the main thing that they do.
yeah, if it's the main
If
thing,
it's incidental, then they don't.
perfect. That's exactly right. You nailed it.
Yeah.
Nailed it. All of these guys, sometimes I see them in class taking a 65. And I say, what happened? They go, Dean, it's no longer incidental. I actually,
Yeah.
starting to charge a lot of money for that. A bond offered at par has a coupon rate. I like these. You're going to get at least one or two of these seesaw teeter-totter questions.
If it's at par, it's at which is 1,000
Yep.
divided 4. So it would be equal.
Yeah, excellent. I just wish you get rid of that little lisp like you got, like you're questioning yourself on your
I know. I'm so afraid.
interest rates are rising. An analyst would be most likely to state that the business cycle is in which stage?
They're rising. I'm torn between the recovery and the expansion.
Yeah, you're getting these 50/50s pretty quickly. I
But
think you're better at
recovery
this
isn't a
than lumber.
choice.
Yeah, that
Recovery
you're
isn't
better.
even a choice.
Yeah, well, there you go. So then what are you going to go with?
Expansion.
Yeah, I love it. Yeah, perfect, right? So if the answer is not available to you, by the way, you're better than most at these business cycle questions. So,
Oh, good.
and what was it again? And what's the pony thing?
Every pony can trot.
Every pony
Pony can
can.
trot. Yeah.
I like that. Every
He
pony.
starts at the bottom of the hill and goes
Yeah,
up and
yeah,
then
yeah.
comes back
I
down.
like it. I'm thinking of stealing that one. I just keep, you got to practice it some more before I think I'm ready for prime time and we that out. Here is a list of the current ratios of 4 companies. The industry standard for an acceptable current ratio is 2 to 1. So which of the following is correct? So Your current ratio is your current assets divided by your current liabilities, right? So again, I would put it in my own situation, right? I always joke if I do this on my own balance sheet and I get less than 1 to 1, I better get my butt in gear because I'm going to
Mhm.
have a serious liquidity crisis, right?
Mhm.
So which of the following is true? Let's just put it in plain English. Company A has $3.47 in current assets for every dollar it has in current liability. Company B has $1.47 in current assets for every dollar it owes. Company C, $1.19 to 1, and company D, 0.889 cents. Oh boy, that is
Yeah.
a severe kind of liquidity problem coming.
So A's good.
Yeah, A is fantastic, right? A's got no problem.
And
So
so
A's
that's
out, so that means D is out, right?
hmm And then next to that, so let's see, is B better than C? So B's 147.
Yeah,
B
we
is
we
better than C.
yeah, D is definitely out, right? They got less than
Yeah.
89 cents for every dollar. So C choice is out.
A
Company
A
B,
could be it.
yeah, it's actually A, right? Because we got
hmm
it says company B is above industry standards. It's not. Industry standard was 2 to 1.
2 to 1.
So it's
hmm
got to be A. Yeah. Certain documents belonging to a federally covered investment advisor must be kept for a period of time after the enterprise closes. These documents are.
I think the rule, I think, is it 3 years that they have to
Yeah,
keep them?
well, it's for investment advisors, it's 5 years. For broker dealers, it's going to be 3 or 6, mainly 6 if we terminate.
Okay, so 5. Okay,
Yeah, but
good.
you're right. It's 3 years for termination of, for broker dealers, it's 3 years of the termination of business. And this is about a
5 years.
federally covered investment advisor. So
Okay. And they have, it is the responsibility of the IA to do
yeah,
it.
well, no, the SEC doesn't, you don't, the SEC doesn't keep anything for you.
Right. They just come looking.
Yeah. So if you, like when I retired, it's my responsibility to have those documents available for your point period of time of 3 years, right? After 3 years,
Mm.
I was so happy because that means I can throw out the storage shed of documents I have.
Yeah.
Client owns an investment grade bond with a coupon of 5 and a yield to 6.7. If similarly rated bonds are being issued today with a 7% coupon, it would be expected. I like this. This is the other version of the one we did previously.
5%. It's priced to yield at 6.7. And that
Remember,
one
this
is
is, I
seven.
used mom's thing, deal or no deal.
Mm-hmm. So 5. And so it's more. So it would have a positive net present
No, remember,
about
not a
no.
good deal. If we can get a new bond with 7 and this only pays us 6.7, we're going to say, screw that. Why would I want
5%.
6.7 when I can get a bond that pays me 7? So this has
Oh,
negative net
opposite.
present,
Okay, okay.
right? The last time we did this question, it was 7.3. Then we say deal, right? Because what we're
Okay.
comparing is what we got in this bond versus what we can get in new bond. And this is less, right?
Okay.
So that's a negative net present value.
Because
Means
it has an inverse relationship.
that's right. And that means no
Okay.
deal.
Okay.
Under the Investment Advice Act of 1940, what is the maximum fine? So it's important here that we're not talking about the Uniform Securities Act. We're talking about the Investment Advisor Act.
10,000.
Right on. Right on.
Is it accurate to say that if it has a number out beside it, it's federal, and if it doesn't, it's state?
Uh, yeah, for the
So,
most part. But
okay.
the only exception I would say to that is that the Uniform Securities Act is a template. And so Uniform Securities Act, and then it has a number, your point, Insider Trading Act of 88, Securities Act of 33, Securities Act of 34, Trust Indenture of 39. Those are all acts of Congress, and your point, primarily the SEC. The
Okay.
only place I don't want to follow you with is to make sure you understand you are not being tested on a particular state's rules.
Okay.
being tested on what's called a template, the Uniform Securities Act, and then states have their versions, whatever these rules are that we're discussing.
Just a model rule for it.
That's exactly right.
Okay.
Right. And then you get questions like, if you're state covered, life sucks, but you got 15 states, whose state do you actually comply with in terms of like net worth and stuff like that? It would be your home
Yours.
state, right?
Okay.
Although there
Mhm.
are others to be used, may be used in the construction of a portfolio. The primary asset class used in asset allocation models is going to be,
1, 2, and 4.
yeah, right on. I like that
Mhm.
one. Good job. And then remember the kind of trick is to take your age and minus, like I'm 62. So I ask you about an asset allocation about Dean, you'd say 100 minus 62. Dean should have about 38% in equities, and then some percentage balance of that, 62% in bonds, and then some cash. That's kind of a trick, but it'll get you to a 50-50. Right.
Okay.
You'll be able to eliminate pretty quickly. And then you can also like eliminate anything that has a muni bond asset allocation, unless I specifically say that Dean is in a high tax bracket, in which case you can toss out any asset allocation model that isn't got munis on.
Okay.
The administrator may require which of the following from a federal covered advisor. So at what point, what things do I not get to say to the state as a federally covered investment advisor, neener, neener, neener?
Mhm. So I know they can ask for a filing fee.
All about the money, all about the money.
Hmm.
You are exactly right.
And
So you need
they
four, so that means you're either going A or you're going D.
add, let's see, copy of material, advertising. I think it's all of them. The only one I'm questioning is the advertising.
Well,
But
it's not all of them, right? It's not all of them. So your point, you got rid of two. We don't have to give them any advertisements for the firm because we're federal.
oh, B is for the no.
So it says filing of it says federally covered. Do I have to show the ads that I'm running like Fisher Investments to any state? Fisher Investments
Mm,
spends hundreds of millions of dollars advertising, right? Fisher Investments
right.
for fiduciaries, we don't make commissions. I mean, they run that every day. The answer is no. So, if the state wants something from Fisher Investments, what can they get? They can get one and four.
4. Okay.
One and four. You were right about the fee.
Part 1B is what actually?
Oh, that's the firm itself. How's the firm structured?
Okay, okay,
Is it,
okay.
LLC, general partnership? How are they going to conduct business? Which of the line would make a corporate bond more subject to liquidity risk? I kind of like this one.
Okay. Liquidity risk is when you can't turn it quickly. You're stuck
That's
with it.
exactly what that is. That's exactly what that is.
So it's a bond, so long and low
Well, now that would be if I'm asking about volatility. I'm just asking you, can you sell this in the
liquidity.
secondary market, right?
Hmm.
And what's going to make it harder to sell? I think you're right. You are on the right. Long-term bonds
The
are
longer you have, it'll be
that's
harder to sell. So
longer the
short
maturity. That's right. The longer the maturity, the less liquidity. So you definitely
mm,
need two.
is it 1 and 3? B?
One and three. Which of the following will make it more subject? So it's bad news, right?
Oh, bad. I'm sorry. So okay, so then it's bad if it's long and a low credit rating.
There you go. Right.
Yeah.
So it's two and four. New convertible debt security has a provision that it cannot be called for 5 years. This call protection is most valuable to a recent purchaser if the security if. So one of the risks you have is what's called call risk. You may not get to hold the bond to maturity. And so, call features are advantageous to issuers in a declining interest rate environment. And this says we'll at least let you collect some of your thing, but now it says it's convertible. Right. And so now you got to decide, are they asking about the conversion feature or are they asking you about your ability to convert?
They're asking about your right to hold on to it when they're trying to take it.
Exactly right. And so you are protected from what we call a forced conversion. That's a really difficult one. I would have probably missed this with the just a regular call feature, which would be B. right? It prevents.
Yes.
So, but this one is because it's convertible. It's that idea that they can't make you, give back the bond before you get a chance to convert.
Hmm.
One of the risks found in equity investing is known as unsystematic risk, very testable. I mean, this is another one. I hate to say it, but if you miss this one, it's one of those ones. Angels weep for you.
So
You
I,
flunk the
if
entire
it's
test.
if it's systematic, you can't do anything to prevent it.
Yeah,
You can't
that's right.
diversification won't help, so it will here.
There you go. Very much a test question, right? Very
Hmm.
much. What's the easiest way for retail investors to accomplish that?
Is going to be asset allocation,
A mutual fund, right?
right?
A mutual fund. When using the process of registration by coordination under the Uniform Securities Act, issuers shall simultaneously submit to the state documents filed with the SEC under.
Mm. So 33 is what?
Yeah, you're going to
Yeah,
coordinate the same time you're
33.
doing your registration statement with the
Hmm.
feds under 33, you coordinate with the state administrator. A customer purchases shares in a municipal bond fund. Which of the following statements is true?
This is where I automatically start thinking, and I don't think it's going to help me here, but I automatically start thinking about the tax advantages for
Well,
state.
there you
And,
go. There you go. The tax advantage. The reason you buy a muni bond fund is tax advantages. You're absolutely right.
and
So, what
so,
part of a muni bond is tax free? It's the interest, right?
hmm.
But if you're in a muni bond fund, that interest, die 90, is going to be distributed to you as a dividend. But since the dividend is the pass through of the tax free interest, two is true, right? Because
Okay.
the dividend is representative of the tax free income flowing through to you. So
Hmm.
two is true. The only component of muni bonds that have tax advantages is the interest, the income. And so if your portfolio manager buys muni bonds low and sells muni bonds high, you're going to owe taxes on that.
Hmm.
And so the
So
answer
the,
is two and three,
okay.
right? So that's a unique. Your point, though, I love what you're doing. Muni bond, you're thinking tax advantage, right on.
Hmm.
Right? And there's your tax advantage from that muni bond fund right there.
Okay.
A corporation's balance sheet shows assets of 930,000, of which 400,000 are current assets. It also shows 525,000 of total liabilities, of which 215,000 are current liabilities. The company's working capital is.
Current
You should
assets
definitely.
minus current
There
liabilities.
you go. So we got to figure out what that is, right? So we're going to take the total assets, 400 current assets. There we go, 400 minus 215, right?
Hmm.
Excellent. Right? We're going to take the current assets minus the current liabilities. So those other numbers are in there just to mess you up. Has nothing to do with answering the question, right?
I'm really
By the
good
way,
at going down that goat trail too with them on the
right? Yeah.
numbers.
But another different question I could have asked you: what is shareholder equity? What
It
is
is.
shareholder equity? And we would take assets minus liabilities, and that equals net worth, shareholders' equity. That's the classical balance sheet equation, by the way. Is that assets 930,000 minus liabilities 215 equals uh, net worth, shareholder equity. When advisory clients wish to structure their portfolios to support companies that engage in social or environmental policies they agree with, this is known as.
It's a non-financial.
What is a non-financial consideration? That's true. And I said, well, listen, what are you trying to do? You're trying to make an impact in the
Mhm.
economy or something? I don't think you'll see this. I think you're absolutely right that if you have, again, people who tell you that they want their values to match their portfolio, I get it. We totally get it. But, the idea there is that's going to be, and you nailed it, an investment constraint.
Okay.
right? Because constraints are things that are going to keep us or, make it more difficult for us to reach our financial destination. So you're telling me I'm not going to be allowed to make certain investments.
Mhm.
What is the term used to describe a person on the floor of a stocks exchange, so Key Point Stock Exchange, willing to buy or sell shares, a specified stock? If this was the over-the-counter market, we would call you a market maker. But what do we?
Specialists.
Yeah, right on. I specialize in XYZ,
Mhm.
right? So arbitrageurs are people trying to profit from price discrepancies. Floor brokers execute orders for clients and member firms. Which of the following would be used to provide end-of-life instructions once a person becomes incapacitated?
It's a instruction. So I think the durable power of attorney is what you
Yeah,
have.
remember that? That's right. That survives.
Yeah.
That says end-of-life instructions once a person becomes incapacitated. So
Mhm.
durable power of attorney just means I still can make investment decisions. It doesn't mean that as your broker holding a durable power of attorney, I get to say, do not resuscitate the client.
That's living will.
There you go, right?
Mhm.
It's a little different. You got to be careful what the question's asking. Like,
Right.
can I turn your account? I'm joking. Can I make investment? That's different than can I pull the plug on you? Under current federal tax law, which of the following would have an effect on the amount of taxes your clients would pay?
I think it's C 1, 3, and 4.
Yeah, one, you're going for 1, 3, and 4. You're going for all
Hmm.
1, 2, 3, and 4.
Uh, well, I guess, well, I don't know that citizenship
Yeah, we have
would.
different taxes for people who are
So,
not.
okay,
So
okay,
1, 2, 3, and
okay.
I don't think you're going to see it on the test, so who cares? Anderson is a longtime customer of Mammoth Gain Securities, a registered broker-dealer. Anderson mentioned to the agent representing his account that if the common stock drops 10 points, he might consider buying it. Anderson has a long history trading high quality, large cap stocks with the agent in his non discretionary account. Boy, that's key.
Hmm.
So I can't make a decision about action, asset, or amount for Anderson because I do not have a discretionary account. If ABC stock falls 10 points, Anderson cannot be reached and the agent purchases the stock. Oh my God, the agent is an idiot.
Yeah, A.
Right on. Very testable. They love these kind of questions on the test. On the Uniform Securities Act, which of the following is included in the definition of an investment advisor? Remember, we have the ABC test.
Hmm.
To give investment advice. What kind of advice? Investment advice. Do you tell people you're in the business of giving investment advice and you want compensation?
Ooh, it's either going to be B or bad publisher thing, but non-specific investment
Right.
advice. So,
This is why you're getting a 65. Right? Your mom is charging people a combination, right? A wrap account.
hmm.
The answer is B. That's called a wrap account. We're
Okay.
wrapping our products and services into a fee.
I would have missed it because I would have picked C.
Yeah, well, that's good. Give you the
Yeah.
C, right?
Hmm.
According to NASA, North American Securities Administrators Association statement and policy on dishonest, unethical business practices of broker dealers and agents, an agent may. So one of these things we can do as an agent of the broker dealer, one of these things we cannot do. Well, I should say three of these things we can't do.
Yeah. And you can't borrow money.
Yeah, so you,
Overseas
yeah, you can on these ones you can use process of elimination.
hmm.
You say, well, I know I can't do that.
And the written power of attorney doesn't have anything in it.
That's right. That's exactly right. So C's out.
And let's see, exercise discretion. You can do that
There you
if
go.
you,
Oh,
yeah.
All right. That happens every day.
Mm-hmm.
Which items change when a company pays a cash dividend? So key point, pays it.
And when they pay it,
Right. So what happens to your working capital tonight if you start paying your bills? Nothing, because your assets go down, your current assets go down by the dollar amount that you're paying the bill. Your liabilities go down, so it's a wash. There's no effect on your working capital when you pay your bills. A cash dividend is a liability, and you're paying it. You didn't declare it. If you declared it, it would be decreased. So one is not changed, right?
mm-hmm.
Your total
And then,
assets are certainly going to change because you have less of an asset called cash. Your liability is going to change because you have less of a liability because you just paid the bill. So two and three are going to change. Your net worth doesn't change because you have less assets, less liabilities. That's a wash. There's no effect on your net worth paying your bills, right?
mm-hmm.
As the assets go down by the exact same amount, your liabilities go down. So these ones are
So,
tough. The way I think you go about attacking these is just think about your own personal situation, your own personal balance sheet. What is your working capital? Current assets minus current liabilities, right? What is
mm-hmm.
your total assets on your balance sheet? What's your total liabilities? In an individual, this is called net worth, right? And now I'm saying
Yeah.
you pay a liability, you know, I'm
And the opposite would be if they,
new bill. Yeah. If
they
they declare
okay,
the dividend, then it's the opposite because now
okay.
you've got a new liability, right?
Mm-hmm.
Which of the following is fraudulent or prohibited for an agent under the Uniform Securities Act?
It's D.
The implying the registration. Oh, yeah, there you go, right? Boo.
Mm-hmm.
Remember, we said that's a nasty word, and we never use the
Yeah.
word approve. We never use the word guarantee. If the investment industry, the term spread has many different meanings. That's true. It always means difference. When used in a discussion about bonds, which of the following would be most appropriate?
B.
Right on. I wish you just get rid of that little lisp
I know.
again.
Well, I
There's a
was torn
difference.
between B and D because
Oh,
it
well, there you
looks.
go. Well, there's a difference between high credit quality bonds and low credit quality bonds. Bail bonds, by the way, again, this is economic stuff. You got it correct. If the credit spread is widening, that's a negative leading economic indicator because that means people are selling their junk bonds, price go down, yield go up, buying high quality bonds, treasuries, causing the price to go up and yield to go down. So if that credit spread is widening, that's a negative economic indicator. If that credit spread is narrowing, that would be a good sign because that means people aren't worried about as much as about risk. So, Lord John Maynard Keynes said money's like a giant floating crap game. It's always going from one place to another, and the credit spreads helps us recognize where money is coming and going to. Bail bonds might issue warrants in connection with a bond issue for which of the following reasons?
They're sweeteners and they
That's
can lower
exactly
they're
right.
allowed to charge a
Love
lower
it.
price because
Love
of
it.
what they're giving.
You nailed it. So now you just got to squeeze the trigger, right? One and two.
Hmm.
Excellent. In a trust, the person who establishes the trust and decides on its terms is
A, the grantor.
right on, right on. Under NASA's model rule on unethical business practices for investment advisors, investment advisor reps, and federally covered advisors, which of the among statements regarding advisory fees is true?
Let's see. Advisory fees may be any amount provided the client has agreed to all fees and disclosures. Fees may, I mean, they can be, I mean, I guess a question mark for now, they can be, I think.
Yeah, I like that. Yeah,
Um,
that's exactly right. Is true. Advisory fees may be any amount. Oh, no, no, no. Remember, you can't charge anybody what you want. It's got to be somewhere in the realm of, reasonable.
mhm. And then 2 just doesn't even, they're
No,
not regulated for sophisticated
that's right. 2
clients.
says you can just ignore it, if
Yeah, you can't do that. So it's gotta be, let's see, 3, the advisory fees must bear relationship to the amount of time. I mean, yeah, no, I mean,
yeah, you got to take this another test taking twist called reduction to the ridiculous.
yeah,
So, you're true to say that, maybe it should bear a relationship, but it says must. And no, I
and
don't,
then,
because I spend less time on you doesn't mean I get to have to charge you less.
right. And so I think it's gonna be just
Right on.
4.
Right on. An agent receives an order from a client to purchase. There's the action, buy or sell. $20,000. There's the amount of whatever stock looks good. Oh, we're missing the asset. To make a decision about action, asset, or amount, I need to have discretionary authority.
Time and price is all you can do without
Yeah,
it.
that's right. That's right. So the answer is C. Very much a test
Mhm.
question. Action, asset, amount. Which of the following would be considered a prohibited practice if performed by you without appropriate disclosure?
What can I not do unless I tell them about it?
Yeah, yeah. I mean, you're right. You're going to be both an agent of a broker dealer, and we get this thing done, and an investment advisor rep.
Agent, position, sales, charity, loans, and shares is not in solving his client. Mm. Oh, I
So, what are you going to be in trouble for? Which of the following would be considered a prohibited practice if performed by an investment advisor without disclosure?
it's almost like when you inherit it, it's kind of like you couldn't help it. So,
Yeah, yeah. That's not something you need to tell me about as a client of
yeah,
Farm.
um, acting as an agent of a brokerage firm that executes trades, he recommends and receiving commission.
Very testable. You say, Dean, not only am I an investment advisor rep, I'm also an agent of the broker dealer. And if you
I
buy
think
this
you
mutual fund,
definitely have to tell that,
that's right.
hands
That's hey,
down.
they're very testable, right? You got to tell
Yeah.
them this thing that you're representing both the broker dealer and the insurance company.
Hmm.
When discussing a stock exchange, a specialist is.
Okay, so specialist is the person who is the secondary,
That's right. Secondary market for sure.
which could be the New York Stock Exchange and member of the New York Stock Exchange members and also acts as a market maker. Let's see. I think that A is more asking about what capacity you are.
Yeah, floor broker is the guy who
So,
executes orders for clients and member firms. It's not A.
and then electronic brokerage, I don't,
Yeah,
that
that would just
is
be like
not
Schwab, Robinhood.
applicable. That's, I think it's C.
Yeah, good job. Excellent.
Yep.
Excellent. An investment advisor rep for ABC Money Managers, a wholly owned subsidiary of ABC Securities, sold 1,000 of a registered securities trade on the New York, owned by one of her advisory clients to another one of her advisory clients. ABC Securities charged commissions to both the buyer and the seller. This is known as,
D.
yeah, you're crossing it from customer A to customer B.
Mhm.
And then you have to have consent to do that by completion of the trade, right? By the way, the conflict there is this dual agency. You're representing both the buyer and the seller.
Mhm. And you have to disclose it, right?
Right on.
Yeah.
Bala is an investment advisor in states W, X, and Y. Bala is completing the form ADV to register in state Z. Which of these would be automatically registered as an investment advisor in state Z?
I
So,
gotta give them names. I can't of
yeah,
states. I
I'm
can't. I
with you.
mean,
I'm with you. I don't know why they don't. I mean, it's crazy. I like to sometimes add my own name. So I like to, when I'm doing this, I like to add my state and then use contiguous states. So what I mean by this, if I would say Bell is an investment advisor registered in Arizona, Nevada, and New Mexico. I was
okay.
completing the Form ADV to register in California. Which of the following would automatically be registered in California with Bala's effective registration? So sometimes I just like to give the cast of characters. I hinted at this, like when it says um, an investment advisor app. Oh, that's me.
Mhm. So it's going to be, yeah, Thomas and I, which is the IR because the others are come with the
Well,
uh,
remember, it's got the officers of the corporation will be automatically registered. So not just any old IRR, not Thomas, not the IT guy, not our legal counsel.
the president.
That's right.
Okay, gotcha.
For bonds selling at a discount, the yield to maturity would be.
Okay, so if it's
You're going to
added,
get two or three of these teeter-totter seesaw questions.
if it's trading at a discount, yeah, I struggle with these, but I'm gonna draw it out.
Yeah, I think you always should draw your flat line, which represents a bond at par, right? Boom. And then it says it's selling at a discount. So then I draw my line here.
And it
And
had
then
interest
remember,
rates had to go down.
that's right. So here's our nominal yield, right? And then we
Mhm.
have our teeter-totter tells us that the current yield is going to be in here. The yield of maturity is going to be in here. And the yield to call is going to be in here. So it says here the yield to maturity would be. So now we can put this here. And so lower than the nominal yield, equal
Mm-mm,
the nominal yield,
mm-mm,
higher than the nominal yield, ding, ding, ding,
mm-hmm.
ding. Now, by the way,
Yeah.
test taking trick, I kind of said again, this is the principal mutual exclusion that when I have two opposite answers, it's one of the two.
Okay.
Right? And, Socrates is a dog. Socrates is a philosopher. It's either lower or it's higher. It can't be both.
Okay.
A farmer entered into a forward contract to sell his produce at 227 per bushel. So he's short the futures. At expiration, the date of the contract, the price was two. The farmer would receive.
So he is the producer, or he has the product.
Yeah, I like it. Is he happy or sad? He's a happy guy because he made some money on the edge that will offset the loss that he has in the cash marketplace.
He's trying to lock the price in.
That's exactly right. So he has a forward contract. So he gets to sell at 225.
Even if it's at two to get
That's
in.
right. And now it's at two. So what's he going to receive? He's going to say, "Hey, I'm delivering my
225.
I'm delivering my by the way, this is not a future. This is a forward contract. So we got to be a little careful here. And the reason we got to be careful is because he does have contraparty risk, right? He's got the risk that person can pay the 225, right?
Oh, that's right.
And if this was a futures contract, it wouldn't be a problem. But this could be his local grain elevator, and they say, "Sorry, Mr. Farmer." Right. So that's why the futures are better than the forwards because the futures have a clearing intermediary, right? Somebody in the middle
Mm.
makes sure you can make good. A stock that does not have a ready market is said to have a higher average degree of.
Doesn't have any money, is it? Mm. Market risk?
Oh, I'm disappointed in you've been doing so well. Ready market means how quick can you turn something to cash?
Liquidity.
Right on, right?
Yeah, yeah.
I told you I've moved off grid and I have the first yellow MR2 Spider that came off the boat from Japan.
Mm.
And everybody tells me that the thing is worth, $25,000. I go, well, if I could find that person, send them my way because they give me 25, I'll give this to them.
Yeah.
Right. But the finding the buyer is very difficult. The car is not very liquid because it's it's kind of a weird kind of an automobile. Right. So I got tired of trying to turn it to cash at a price I didn't like. So I said, screw it. I'll keep it. Which of the following is the least suitable mutual fund transaction? Well, kind of interesting. Least suitable.
The mutual fund is usually for short, I mean, a year or less, right? Or no,
Yeah,
that's
encouraging
products that
investor in
go
his early
in.
30s to invest in emerging markets mutual fund. I've seen worse. I mean, emerging markets, high risk, high reward. He's in his early 30s. I don't know. I think I could make an argument that might be okay. Let's look at B. I tell you that you should go from Fidelity to Franklin while a deferred load is in existence. Oh my God.
Mm-mm.
So you're in the B share at Fund A. And I'm telling you that you should go to another fund, and that means you're going to be hit with the contingent deferred sales load, right? Because it says deferred load is in existence, meaning you haven't got to the point where your B shares or A shares. That sounds bad.
Hmm.
And encouraging you to buy a muni bond fund when you're in a high tax bracket, perfectly reasonable.
That's good. Yeah.
You're encouraging a 65-year-old to keep a small percentage in a large cap growth fund. I would use here what I call the Sesame Street trick. One of these things is not like the other.
So let's see. Mutual fund resources. I still don't know. This
Yeah,
one's
it's going
got
to be
me all
B.
messed up.
That's okay. B, right? Why would I tell you to go from one fund family to another when you're going to have to pay a contingent deferred sales charge,
Oh, okay.
right? So that's why it's B, right?
And the others are dealing with just the
Yeah,
funds.
yeah, B,
Yeah.
you might, yeah, they're okay, right? And
Yeah.
by the way, these I always are challenging. These are the judgment questions, right?
Hmm.
Least suitable, most suitable. You go, yeah, you know. Looking at a balance sheet, the corporation builds its capital structure with all the following except, I like this. So, what is the capitalization of a corporation?
The balance sheet is the snapshot look at it.
That's right. And so the
So
cash is going to be on the balance sheet, but is it part of the capital structure? No, we're looking at the balance sheet. So there's our balance sheet. Boom. And boom, right? This is our assets, right? This is
mhm.
our shareholder equity. We have current liabilities and we have long-term liabilities. That's the bonds, right? So we're asking what is the capital structure, and the capital structure is going to be this part of the balance sheet. It's going to be the bonds that we've issued to capitalize the company. We issue bonds to capitalize the company. We issue stock to capitalize the company. And then we keep some of the earnings that we don't distribute as a dividend. As you see, cash is not a part of the capitalization. The cash
Okay.
shows up here, right? So boy, that's a tough one.
Yeah, I would have missed that one all day.
Yeah, you will remember too on the balance sheets. I do think, my friend Brian Lee and I both, we think the 65 is the toughest exam because it's really not like people who take a seven go, oh, that's ridiculous. I go, well, no, the seven kind of has more of a narrative thread to it. And the 65 does have, like balance sheet things that are not that easy. They're not aim and shoot, point and click. So what we said is you got to have a margin of safety, and the margin of safety comes from making sure you can do all the other things that are, going to be aim and shoot, point and click. As your tutor, I think you're doing pretty good on some aim and shoot stuff. You just boom, and then you're doing even well on some judgment questions where you're still kind of getting the 50-50, not quite sure you squeeze the trigger on the right one, but you have. Trust your judgment, by the way. You got to trust your gut on the test. I always tell people, I can't prove it, but being confident in your answers on test day is like 10 points, not,
Yeah, I
you
agree.
know, you know. Which of the following are governed by the prudent investment rule?
You got to make sure you do the right thing and be conservative. Don't do anything
That's
crazy.
right on.
Mm,
So who
government.
is that most important legally to? What kind of folks are, legally defined as fiduciaries who should be making the decisions in the best interest?
Everybody.
Right on. Right on. In contrast with a typical forwards contract, futures contracts have.
So if one is standardized and one isn't, well, but that's
Right.
both of
And
them.
standardized, remember, is a good thing. All right, boom.
So the Fords are not standardized. Yes.
That's right. That's right. As part of its suitability determination, the IA firm requires all potential non-business clients create a family balance sheet. Items that would be included are,
I know the gold jewelry would be.
yeah, absolutely.
And you wouldn't, the balance owed on, it's nothing moving forward, is it? It's just
Well,
right
that balance owed is a current liability,
paid thus far for the year. And
right?
then I
So
don't,
the amount paid thus far for Botox injections, I'm not so sure that would be a balance sheet or an income statement, right? I mean, the amount paid doesn't show up on the balance sheet.
mm-mm. I think it would be on the income statement though.
That's right. Yeah. Money
Yeah.
that's come in and money going out, right?
So one would be, so it's gonna be, let's all be there. So 1 and 4. And
What about the loan you owe
loan,
the automobile company? You own the automobile company for your car.
it would be on there.
Yeah, that's right. Right. So,
1, 2, and 4.
yep. Right. Of the four pairs of assets below, I like this. Which pair provides the highest level of diversification?
So it's the highest of the coefficients.
That's right. So which one?
It's gonna be D.
Well, remember, you for diversification, you want the highest number negative correlation.
Oh, A.
Yeah, so be careful on this one. If I said
Yeah,
least,
yeah.
right, you need negative correlation, and that's the pair that gives you the negative correlation. Under modern portfolio theory, the one that wouldn't give you any diversification is choice D.
The plus one, yeah.
Yeah, I think of this as choice D as being like Lowe's and Home Depot. They're almost the same damn stocks, right?
Yeah.
Or Chevron or in ExxonMobil, right? Which of the following is not affected by the issuance of a bond?
If the bond is issued, is it
So think about your personal balance sheet. You have issued a debt security. You borrowed money. So what is not affected on your personal balance sheet?
I borrowed money?
So you're borrowing money, so you should definitely know the day is going to change.
Hmm.
When you borrow money, you got cash, your assets are going to change, right? It says bond is long-term debt. So you're not going to have any new current liabilities, but you do have a current asset called cash, the proceeds from the bond, the money you borrowed. So your working capital, what hasn't changed is your net worth.
Shareholder equity.
Yeah, your net worth is carrying a larger loan balance, but that's, so that's called B. B, shareholder equity is the net worth of the corporation.
I think I would have missed that one.
Yeah, well, you've been very consistent, been pretty honest with the ones you were going to miss, and that's part of the
Hmm.
exercise, by the way. But it's again, as your tutor, I don't worry about that because I think, I have every once in a while I'll get a CPA class. I'm a CPA. I go, well, great, maybe 3, 4 points. It's not going
Yeah.
to kill you, right? I mean, you can make it up. You can make it up elsewhere, is my point.
Okay.
An investment advisor rep by the way, the channel, I'm going into my 5th year on the YouTube channel. For the first 2 years, I didn't have anything on balance sheets on the channel. Nothing.
Really?
And people say, why don't you have any? I go, because I just don't think it's as important as other things. Now, I have 3, 4 lectures you can watch me go through a balance sheet with people and do things, but it's not a big deal. An investment advisor rep of a federally covered investment advisor registers with. This is way more important.
The an IAR of a federally covered would register with the SEC.
Yeah, well, the investment advisor rep. You
Oh, the state, the administrator.
wherever you have a place of business.
Ah,
So be
yes.
careful.
Oh my
Be careful.
gosh. Talk about need to
Be
just get
careful.
up and go to your car.
Well, just be careful, right? Be careful about who
Yes.
you're being asked about. I always joke it's about the cast of characters, right?
Yes. Gosh, that would have
Remember,
been so dumb.
remember, and if you leave, right, then it's your job to tell the state because your firm isn't interacting with the state.
Hmm.
Sarah passed her 6, woohoo, but not the 63. Uh-oh. As Jack's assistant, Sarah has frequent telephone contact with Jack's customers, to whom she provides account information, current stock quotes. So I don't think she's doing any investments here. I don't see any problem here. Sarah is.
And she's in violation.
Well, I'm not sure. Did she do any transactions? I don't think there's any problem with Sarah. Say,
Mm-mm.
hey, I'm Sarah. I'm Jack's assistant. Can I help you with anything? And you say, yeah, Dean, can you, or Sarah, can you tell me what my account balance is? I don't think you need to be registered to do that.
Mm-mm.
Can you give me some quotes? Sure. Right. So you don't need to register. You need to be registered to make public contact regarding investments or tell people to buy or sell. Now, she certainly can't sign people up for a mutual fund, right?
Mm-mm.
But you told me you're missing your 65 so yet. Can you answer the phones for mom's clients and say, hi, I'm her daughter. Can I help you with
Mm-hmm.
something?
Mm-hmm.
You say, are you registered? I said, well, I'm working on it. Let's say, can you tell me I can? Now, assuming that's okay with State Farm, that would be fine. When constructing a portfolio, one of the goals is to increase diversification. Which of the following pairs offers the most diversification? I like this.
I would totally think it's going to be something that has a
That's
foreign side of
something
things.
negative correlation again. Which is
Hmm.
most likely to move differently rather than moving together?
I think it's C.
C, U.S. equity and foreign securities. Indeed, because that's what we're trying to do by doing that, right?
Hmm.
Excellent, excellent, excellent. Which of the following indexes or averages is based on the price of only 65 stocks? And then we tell you it's a 30, 20, 15.
It is going to be, is it the, no, 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 no.
Yeah, it's the
The
Dow,
Dow.
right?
Yeah.
And these are price weighted. They're not market weighted. So they simply take the stocks, prices, add them up and divide.
And is that
Uh,
the large cap ones?
The large cap would be the S&P 500,
Okay. Okay.
right? And then here, Wilshire 5000 would be the total U.S. stock market,
Okay.
right?
The
So
Dow.
you are going to get an answer something like that. PAIS, Federally Covered Investment Advisors, principal office is in state X. PAS also maintains branches in state Y and Z. Who cares? We don't care because they're federally covered. Brenda, we may care. Brenda is the manager of the branch office in state Y. So Brenda is an investment advisor rep of a federally covered investment advisor. She needs to register in state Y. Some of the individuals being supervised by Brenda have clients in state X and Y, and others have clients in state Y and Z. Brenda must register. I like this question because remember, as a federally covered investment advisor, you only register in
Do you have an
states,
office?
yeah, where you have a place of business. So Brenda has a place of business in statewide, period, full stop.
Hmm.
And most people make this more complicated than it is. You know, if it's federally covered, life is easy, right? So you're at State Farm, federally covered. We're not asking about State Farm. We're asking about you. You're only
Mhm.
going to have to register in states in which you have a place of business.
Okay.
An investment advisor has a client who wants to save college for her child. The child will be entering college in 5 years. This is an example of.
I think it's an investment constraint. It's either C or D.
Yeah, and then that's what they're trying to bait you on. I like it, right? You're onto the game here. You know, we we're not going to tell the customer it's too late.
Yeah, just go home.
Yeah,
Uh,
we're going to say, well, listen, that's a serious constraint because the time horizon is pretty important. We only have 5 years to get to our financial destination.
so it's something that would keep you from getting to your goal.
That's exactly right.
So you need the money, but you got to get to the goal.
There, you got it. You got it.
Okay.
What was your thing? You need it now, not later,
That's right. That's now, not later.
right? You
Hmm.
receive a note from your firm congratulating you on passing your 65. Woohoo!
Hmm.
Indicating that you received notice from the administrator that your registration is effective. All right. At this point, you could not. Oh, what a downer, right? This is saying
Hmm.
what I can do. What can I do? Oh, this ends up being a pretty easy question.
C.
Yeah. What's that?
Is it C? Oh, no, no, A.
Oh, no, that would have been a terrible miss.
Yes, yes, yes.
You're not allowed to say, hey,
A.
it's approved by the state. Oh, that would have
Yes.
been bad. Construction of an investment policy statement requires identifying the client's objectives and constraints. Which of the following is not a constraint? Which of the following is not a constraint? Yeah, I think you articulated this very well in a previous question.
Oh, it's going to be, which is not a constraint, is going to taxes?
Well,
Oh, no,
taxes,
liquidity.
well, it's actually risk tolerance, right? So your risk tolerance is an objective, not a constraint. How much risk are you willing to take, right? Now, I could see where I could make an argument that it could be a constraint because I need you to take more risk than you're comfortable with, but oh well, right?
Oh, risk tolerance. Okay.
All the following statements regarding asset allocation are done by or behalf of an investor are true, except.
Only extinguishing an asset allocation done by on behalf of an investor true except. So what don't they do? Let's see.
Yeah, so one of these things is false. Three of these things are true.
This, this one relationship. This is dividing investable asset. This is continuing to association. This one's got me. Asset allocation done by or on behalf of the investor. So what do you do
They're
as
saying,
far
yeah.
as asset allocation?
So I say, listen, it's much more important for us to pick the right stocks than it is for us to get your asset allocation model in order. A, true or false?
Uh,
Us picking the
asset
right,
allocation is the first thing you should do.
yeah, right. That's the whole
Yeah.
point because you're trying to avoid this thing about selection risk, right?
Mm-hmm.
It's again a process concerned with risk with different assets, yes. Dividing into different asset classes, yeah, asset
Mm-hmm.
allocation model. A process with the relationship among returns on different assets, absolutely. So it's A.
Mm-hmm.
Right.
A.
Under the Investment Advisor Act of 1940, as amended by the National Securities Market Improvement Act of 1996 and Dodd-Frank of 2010, an advisor is required to be registered with the SEC if.
Yes. A federally registered
Yeah, that's
advisor.
what they're asking you. They're asking you, what is the federally covered investment advisor?
So I know that that's 110 million.
Right, that's right.
So let's see.
So we don't have, it doesn't look like we got that. The advisor's clientele is credit unions, less than 100's out. The advisor's advice relates to the U.S. government now. Remember, one of the exemptions we have from being state covered and tosses us into the federally covered is if we're giving advice to mutual funds.
Okay.
That also would make us federally covered.
So advice to mutual funds puts you as an
Yeah,
automatic federal cover.
that's right. So
Okay.
the investment advisor to the Fidelity funds is Fidelity Management and Research. Fidelity Management and Research certainly has more than 100 million, but even if they didn't, they wouldn't be state.
Okay.
The industry is concerned about protection of both firm and consumer data. Where would it be acceptable to store this information?
On any of them?
Yeah, right. You just got to make sure which one you're using is properly protected, right?
Hmm.
This means in every firm's WSPPs, they have to have policies and procedures about cybersecurity. And everybody has to read that and sign acknowledging that they read it and they understood it. The Uniform Securities Act is designed to protect the general public and not restrict the activities of institutional professional investors. Any offer or sale to any of the following would be considered exempt from the Uniform Securities Act registration and filing, except. So one of these people is a living, breathing human being, a natural person who is entitled to the protections of the Uniform Securities Act. The other three are capable of protecting their own assets and would be on their own in terms of the regulatory framework.
Okay. So with regard to advertising, is that
Well, it's registration and advertising, but
okay?
right, we're looking for a retail investor, a living, breathing human being walking planet Earth. Is a broker dealer a retail client? No, because they're not a living, breathing human being walking planet Earth. Banks, retail persons? No, not a
Mhm.
living, breathing human being walking planet Earth. Saving
Okay.
institutions, not a living, breathing human being walking planet Earth. Chief executive officer is a living, breathing human being, a retail investor.
Okay.
It doesn't matter if he's a CEO. There's a lot of stupid CEOs out there. I'm joking.
Yeah, there are.
They're entitled to the protections of the Uniform Securities Act.
Okay.
Two of the major factors involved in the capital asset pricing model are, I like this. I like this one. So this is again, they're not asking us to do the math. They're asking to recognize input.
So I know that for CAPM, it's the rate of return.
That's right. So when,
So it would be, let's see, so you need to know, Sam, what all do we need? Two of them.
yeah, we need two of them, right? So we
So
should
you
have been able to know
need
it has nothing to do with tax rates because
mhm.
CAPM assumes that there's no taxes. So
I know you
three,
need
right?
four, right?
Yeah,
Market
market
risk.
risk. That's the beta, right? The risk premium
Hmm.
for the volatile stock. So are you going to need to know something about the market? Yes.
Hmm.
Are you going to need something about that particular stock?
You got, well, the risk-free return.
That's right. So it's going to be or two and four, right?
Two and
Those are the
four.
things you definitely need to know to kind of figure that out.
Hmm.
Under the Investment Company Act of 1940, which of the following qualify for a breakpoint and a mutual fund sales charge?
See what they're going to be looking for here is
Right.
that they go
That's
together, right? I think.
that's exactly right.
See, so Mr. and Mrs. Jones, they they would qualify because they're married.
That's right. One is true. We need one.
Hmm. Neighbors 10, Mickey and Lee from the investment club. I'm not 100%. I want to say no about two, but I'm not quite
Yeah, you
there
should
yet.
definitely know that investment clubs are not allowed to pull purchases for purposes of meeting a breakpoint. So two is out.
And so let's see. Alan is the vice president from under contract to provide investment risk. He buys shares of me. He alone could. Yeah.
Yep. Yep. So one and three.
So one
Excellent.
and three.
Excellent. Which of the line would not be considered by the administrator to determine whether churning has occurred?
That's frequently trading in the account.
Yeah, churning very testable is excessive trades in size and frequency. More about me making commish than you accomplishing your financial goals.
It'd be residence D.
Yeah, it's D indeed.
Mm-hmm.
Which of the following terms best describes ETNs and leveraged ETFs?
Alternative investments.
Yeah, yeah. And some firms, will say you're not allowed to do that. One of the benefits of being a limited partner in a direct participation program is
So limited partner is gonna be, sort of, I don't think a limited partner can make certain management decisions. No, that's the general partner.
that's
Um,
exactly right.
mm, I know B's true.
That's right.
Um,
Boom. That's true.
so that's it.
Yeah, right. The income generated is not long term. And you can't deduct anything from partnerships against your income, your earned income. U.S. citizens own stock in a Canadian company receives dividend. The Canadian government withholds 15% of the dividends as a tax. As a result, the investor reports
Um, so there can a U.S. citizen
that's
owns
right. So my
stock
tax
in
return,
Canadian
what am I going to
company.
do on my tax return? Do I tell my the IRS that I have a non-recoverable loss from my the Canada? No.
Is it
Do I
C?
file a tax return in Canada? No.
Mm-mm.
I take a credit on my US return. I say, listen, I
Yep,
already paid
C.
taxes on this to Canada.
Yep, C.
A credit is a dollar for dollar whack out of your tax bill. Given below are the earnings per share for the previous 4 quarters of 4 different companies being analyzed by your research department. Ooh, earnings momentum. So momentum means looks like it's going swimmingly, and we're gathering speed as we go. So 58, 61, 64, 66. I don't see any momentum there. It seems like it's 3 cents, 3 cents, 3 cents, three
Mhm.
cents boring. 82 to 90, 8 cents. Back to 83. No momentum there. That's a buzzkill. We're going backwards.
Mhm.
25 cents, 27 cents. So 2 cents, 30 cents, 3 cents, 36, 6 cents. Woo, 2
Wow.
cents. Yeah, that looks pretty good.
Mhm.
D, 58, 52. No, that's the wrong way.
C.
Yeah, and then remember, if you're a growth guy, you'd be willing to pay a higher PE for that because I say, listen, the PE is about earnings, and the earnings are going up, right? So that's going to be justify a higher price. Nasdaq has a beta 1.2. One could expect the volatility compared to the S&P 500 to be,
A 1.2, and that means it's moving more over with a higher returns.
yeah, both directions.
So it would be beta is 1.2. At 8.
This is bad miss beta. So if the market is 10% and the security has a beta of 1.2, we
It's
would
going to
expect,
be 20% more.
there you go.
Yeah.
Right? So man, don't miss
It's,
that.
yeah, so
Or
20%.
beta. Boom, right?
Hmm.
You just put some numbers to it if you need to.
That's what I have to, yeah.
Yeah, you just put some numbers and say, let me just make up one, right? If I'm gonna make up one, gonna make up one, make it easy, right? Don't make up a harder one than they're asking. Which of the following is not a type of life insurance policy?
So variable is,
Yeah,
UL is.
variable life. Now, variable life is an insurance policy, but a variable annuity is an
Ah,
investment.
yep, 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 yep.
Okay? I don't know what this the 65 thing is, term to 65. Oh, to age 65. Yeah, it's the variable
A
annuity.
term policy, yeah.
The variable annuity has that embedded mutual fund.
Yep, yep, yep. Golly.
If the economists were to describe defensive issues, very testable. So defensive issues are companies that deliver products and services resilient to the business cycle.
Tobacco.
Well, tobacco is certainly defensive, right? Because, if you're a smoker and times are bad, you probably smoke even more.
Oh, not
Yeah,
included.
right. So
So
You know,
it's
these are things
gonna
you can't delay purchasing. You got to eat, you got to smoke, you got to wear
building
clothes.
materials.
That's right. That's
Yep. Yep.
cyclical. The one they like on the test is to know that utilities are defensive and have a higher dividend payout ratio. Alex purchased a single premium deferred fixed annuity over 10 years ago. So that means he gave the insurance company 100,000 bucks. They put it into this general account. She would be subject to taxation on the deferred earnings in which of these cases. So now you're going to get, paid, whatever the rate is of the insurance. So payments from the insurance company are,
So what your beneficiary receives is completely tax free.
yeah, that's true. That's one of
So,
the great things about life insurance.
but this is so a deferred fixed annuity
Yeah,
over
so
10
you're
years.
on all these deferred products, you pay taxes when you get the money, right?
Mm-hmm.
So,
That's right.
and there's no way it's going to be anything other than ordinary income.
No.
When would an individual employed by an issuer to sell its stock to the public have to register? I like this.
An individual employee.
So, three of these people are not going to have to register as an agent. One of these people is going to have to register as an agent.
And they're selling stock. So let's see. When so the transaction would be exempt, but not the issuer.
Yeah, there you go. That's a good catch there. So this is one of those weird ones. When an individual employed by an issuer to sell its stock to the public would have to register as an agent. What we're looking for is consideration here. It wants to know when the individual must register. And the individual would have to register if it's the insurance company, which
Yep.
is one of the
Insurance.
weird ones.
Yep.
A 401k offering which of the following would be most likely in compliance with Section 404C of ERISA. I like this. So,
Three
fiduciary,
options.
there you go. So we're looking for three options. We got a long-term bond fund, large cap stock, foreign equity fund. And that looks good. Money market fund, government fund, large cap, money market, muni bond. That seems weird.
Mm-mm, mm-mm.
A large cap stock, small cap. We wouldn't have a municipal, by the way, C's out because you don't put muni bond funds in 401ks. Small cap, large cap ETF, money market. So I think here now we got to think like a fiduciary. What is giving my employees the best chance to do a proper asset allocation? Right? What is giving the employees with these three? You were on the right track to know it's three.
I think it's either going to be A or B.
I'm with you. I'm with you. So let's see what looks more like sense here. I don't really think that we should roll out a foreign equity fund when instead we can give them a bond fund, index fund, a money market. I think B is more appropriate as a fiduciary than A. That's just me. But I would
Yeah,
put,
I do too, especially I don't know what it is about it, but the foreign equity, I just don't think that would be what
yeah, that's
would
right.
fit everybody as much as
That's right.
B.
Boring. I used
Yeah.
years ago, I worked at a company with such a boring 401k. It had three choices. I'm like, come on. You know? An investor who chooses to use preferred stock as an income source instead of bonds would potentially incur the following risks.
Okay. The preferred stock. Oh, yeah, on stock, you can only lose what you put in
Yeah,
it.
you can only go to zero.
Yeah. So
Same with a bond, by the way.
that's true. Let's see. So it can be all of them, and that's one of my options. So let's see.
Yeah, you got one, two, three, and four, and you got one, two, and four. So your point now you got to decide is three true. Can preferred stock can't be traded as readily as bonds? No. Preferred stock, like any other stock, can be easily transferred to a third party.
Mm-hmm.
So it depends on what bonds we're talking about, but yeah, it's one, two, and four. I don't think I would worry about this at all, but I would
Okay.
know that preferred stock is a fixed income investment vehicle like a bond, and so you would have interest rate risk. Which of the
Okay.
following describes unsystematic risk?
That's something that can be diversified.
That's right.
So let's see. So it's either gonna be C or A.
You're correct.
So is related to market forces and then is specific to an investment. So leaning more toward C.
Yeah, I trust your gut. You said that answer correctly, way earlier than you squeezed the trigger on it.
Mhm.
I mean, you started
Well,
the answer
A and
right,
C look so much alike that
right? Where you said right out of the top, you said it's related to market forces. No, it's
mm-mm,
related to this specific security. And you said it can be diversified away. You nailed it. That's exactly right. So
yep,
just be careful. Make sure when you trust your gut on your first response, right? It's
yes.
specific to a particular investment. It's also known as selection risk, and it can be diversified away. And the easy way to do it is a mutual fund.
And what made me think it wasn't A is because when I saw the word market is systematic.
That's
So
exactly right. You're pretty good on some of the stuff that
mm,
I think you're better than I don't know what the word is. You sound like, you know, you're,
yes.
you're, I think you're better than you think on some of these questions. Uh,
I have put over 300 hours into
oh
studying
my
since
God, would you?
January the
Oh
16th.
my goodness, my goodness.
Yeah, so
Well,
I'm
and I bet this is probably a sweat equity investment of 300 hours. I doubt you're getting paid per hour to study, but it
no.
shows you're really good at economics. You're pretty good at the judgment questions. I wish you'd trust yourself a little more because you're almost always right, and you still sound like you're second
I'm
guess.
terrified still.
Well, which of one may be done only with the approval of the shareholders of a mutual fund.
Okay, so I know that the shareholders, they have to have approval to change the objectives. I
That's
know
right. So
that
that's
for
four.
sure.
So it's A or
Mhm.
C.
Funds in the open market. Personnel changes in the transfer agent organization.
Yeah, you should have been able to make three. We don't vote on, people coming and going, right?
Mm-mm,
Personal
mm-mm,
changes.
no.
You're right, it's four. So now you got to decide what's a bigger deal, one or two.
Let's see. Change from diversified to non-diversified or the purchase
Yeah,
of
yeah, we don't vote on purchasing or selling securities.
uh-uh.
That's the manager, right? One and
One,
four.
yep. You'd have to be asking everybody all the time.
Yeah, I mean, it just wouldn't work. That test taking
No.
reduction of the ridiculous. What does it work like if our bond fund manager, every time he wants to buy a bond, has to ask, 10,000 shareholders in the fund, they want to do it?
Yeah.
If an investment advisor uses a client questionnaire to determine their situation, the advisor is,
Client questionnaires and they are. mm, I mean, there's nothing wrong with it.
that's exactly right. So it's not A or
They're
C.
mm-mm. So I say D.
Yeah, that's a layup.
Hmm.
Yeah, we got to
Yeah.
know more about you. Which of following is not exempt from registration as an investment advisor? So three of these are, and one of these is not.
And it's a federal one, I guess, from the
Yeah.
Advisors Act. So
Mhm.
I federal. So who's got to register for
That's
federal? So
exactly right.
let's
Take
see.
your time on that because, boy, I'll tell you, that's where they kind of get you upside down and backwards. So which of the
Administrative.
following is not exempt? Your point under 40. So they're asking which one of these is a federally covered investment advisor.
So private funds. That one too. So D would be exempt for D.
Yep, you're correct.
And if they have only offices in G and they
Right.
deal
That
with
would be
them
state
legally,
covered. That's right. DC
yeah.
is state covered. So they got a
And
50-50. It's either A or B.
it's A.
It's actually B.
Is it?
Yeah, remember
Ah,
we just said the insurance company makes you exempt. Advisor with a total of 125, right? That period, full stop. That's over 100 million.
oh man.
Yeah, that's all right.
When is
You,
it when the insurance company when it's not exempt for insurance?
when it's not exempt for the insurance company on the broker dealer side.
Ah, okay, okay, okay,
It's, you got
okay.
to be careful to cast the characters.
Yep.
If you
Okay, okay.
had expectations of high inflation, you would.
So if inflation is gonna go up, then you're going to want to put, inflation goes up, rates are gonna go, so inflation's up. Okay, so let's see. If inflation goes up, then interest rates,
Well, what is one of your, what in your quiver, your arrows in your quiver, what arrows do you have for somebody who's worried about inflation?
if they're worried about inflation, then I would fix.
It's the opposite, common.
No, you're right. Yep, common stock is the best hedge against inflation.
That's right. So if you had
Yep,
expectations of high inflation, you would.
yep. You would put more into the stock equity.
Yeah, right on. You wouldn't buy
Yep.
more bonds. Right?
Yeah,
So
man, I knew that. Golly.
yeah, I thought you were going to get that. You're pretty good at that. So I was surprised you
Yeah.
didn't get that one.
And I have it ingrained in me, common stock,
That's
hedge
right.
against inflation.
So
Yes.
term digital assets. This is something new. Would include all the following except.
D.
Yeah, it's kind of a gimme based on this answer
Mm-hmm.
set. And a participant of 401k dies before retirement. The proceeds are distributed according to.
The, I think it's gonna be the, it's gonna be 401k dies before retirement.
So mom's
Mm,
401k at State Farm, and she leaves it to you. You're the beneficiary. So what happens?
It would have, it would go through, it'll be the beneficiary, but it would be the,
And the 401k is kind of neat. It doesn't go through
it
probate.
doesn't have, yeah, that's right.
Yeah,
It
right. So
doesn't.
according to the terms of the will,
Yep.
by the way, it's not the will because it has to be designated on the 401k already who is your beneficiary.
But it's the
Oh,
designated beneficiary without going, it
right on.
goes through probate or it doesn't go through
It does
probate.
not go through probate. Oh, my bad.
Okay.
Without going through probate.
Okay.
Which of the following statements may not be made by an agent in regard to a security registered in the SEC under 33?
You can't say it's been approved.
That's nasty word. We
Yep.
never say
Never.
approve. We never say guarantee. Current IRS regulations allow unlimited contribution to which of the following tax deferred plans? So no cap. You can put in as much as you'd like.
Um, see?
Yeah, it's the annuity. Yeah, right.
Yeah.
Give me $10 million, 20 million. All the following are potential benefits of high frequency trading, except. So three of these things are good things. One of these things is bad things.
So trading a lot. You,
Yeah. So who is the person who is not, this is not bueno for?
um, can't remember what is arbitrage where you try to take advantage of.
Arbitrage is profiting from price discrepancies. And so
Yeah.
high frequency traders do arbitrage. There's nothing wrong with arbitrage profiting from price discrepancies. However, it's harder for little guys to do it because they don't have the technology, right? So it's not for small investors,
Okay.
right? Small
Yep.
investors, don't have access to all this stuff. In the opinion of the administrator, an agent is about to engage in a prohibited activity. The administrator may, I like this one.
Okay. If they're about to do it, then they can
Yeah,
do a
time,
cease and desist and tell them
right.
knock it off.
That's right. Time is
Yep.
of the essence, right on. You should know they can't arrest you because they got no badge, they got no gun, right?
But they can submit it
That's
to
right.
the district
Or
attorney for an
that's
injunction.
right. That's
Okay.
right. An agent made written disclosure to her employing broker dealer. She intends to execute a series of private securities transactions with individuals who do not have accounts at a broker dealer. The agent did not acquire written permission from the broker dealer and did not receive compensation, but she did receive written acknowledgement of receipt of the agent's notice. In this case,
Mm. So she She made written disclosure to her broker dealer that she's
Uh-huh.
going to execute private securities transaction with
Yeah,
people who
just
aren't
do
legal.
this, right? This is
Well,
you. And you
well,
told State Farm you're going to do private securities transactions, not sponsored by State Farm, with individuals who don't have accounts with State Farm. State Farm did not give you express written permission to do this. You didn't receive compensation, but you did receive acknowledgement of the receipt. Maybe you had like, had it signed for delivery. In this case, State Farm's going to say, listen, you're not supposed to
she's
sell things that are not sponsored by State Farm.
selling away.
Now, in
Okay.
the test, this will be a very straightforward question. They'll say, an agent of a broker dealer sells an investment not sponsored by the employing broker dealer without permission.
I'm selling away.
Yeah, very much a test
Yeah.
question. Given the following information, calculate the
Oh, Lord.
risk adjusted return. Well, as we said, what we want to do is just go boom right now. But what I want you to know as a tutor, you should know this has nothing to do with it, the CPI, right?
Okay.
You should definitely know that the T-bill rate uh, is going to be perhaps necessary because that could be the risk-free rate of return. The actual return, the beta, volatility is going to be there. Standard deviation isn't about CAPM. That would be about its own, the security itself. So again,
Okay.
I would worry about that one. A sales assistant employed by a full service broker dealer would be required to register an agent when accepting orders for
Sales assistant promotional when they are
one of these
accepting
things
orders
is a
for
security. Three of these things are not
F
securities under the Uniform Securities Act.
C
What's that?
C.
C, commodities, futures, contracts.
Oh, hold on.
So
The
our
full service.
commodities, futures, contracts, they are
No, 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 no.
securities.
Wait, they A.
Right on, right? Partnerships are
Yep.
securities. Those other
Yep.
things are
A.
not securities.
Yep. The options
Adele,
attached
a
to them are.
retiring, there you go, social worker has some money to invest. An agent suggests that would be you looking to investing in a private placement. Oh my goodness. Raising money to build apartment buildings in Puerto Rico. According to NASA, which of these are true?
Mm, private military career, private placements not usually used full time. No, has been violated and has been delivered. Oh. Mm. I have no clue.
Yeah, I think this is kind of odd. I mean, I don't know many social workers who've retired, but impressive she has some money to invest. But then all of a sudden it says we're doing a private placement, and we should know that private placements need accredited investors. So
Yeah.
there's nothing that suggests that Adele has $1 million net worth, or Adele has $200,000 in income, or is married and filing jointly. So I would just say no private placement for you.
Yeah.
I
It
mean,
just doesn't
and then
fit.
then we're building apartment buildings in Puerto Rico. Nothing against Puerto Rico, but I'm like, really? I mean, why are we building apartment buildings in Puerto Rico? I think given that answers, I'm with you. Kind of a funky question, but I would go with one and two.
Yeah, that's
Uh,
weird.
Yeah, that's a funky one. What's the line would you expect to see in investment policy statement of a qualified plan? The investment policy statement is on the desk.
Okay, so it is what is given to
That's right.
so it's the information, the labor, the method used, the listing. It wouldn't be a listing of you at that point. You don't put all the stuff in it,
That's
the
exactly
assets.
right. You're
Yeah,
absolutely right. So we're going to get rid of three.
yeah, and I don't think four would be it either.
Well, it does limitate
Well,
what
it
we're going to
could,
do. Like,
yeah,
remember, we're
because
not going to
the
do
manager,
fossil
what they can and
fuel.
can't do.
That's right. So four is true.
Oh,
Things we will or won't invest in.
method.
That remember the constraints that are maybe there aren't any constraints, maybe there are. So four is part of it. Three is
Mm,
not. So we need four
mm-mm.
without three.
So four without three, so it's either so well, it could be either A or D.
That's right. So you got to decide, do you
So
think two
two,
is
one or
more
two.
important or one is more important?
The information, the summary
So
plan,
think
documents.
take from the perspective of the beneficiaries and what are the beneficiaries more interested in, one or two?
They are more interested in how they're going to go about it.
That's right. So 2 and 4.
2 and 4. Yep.
Yeah.
That's a good point. Yeah.
Corporation is likely to call eligible debt when the interest rates are
Okay. So when interest rates go up, the price of it comes down.
right on.
So there you go.
You got it. Excellent. And by the way, remember, it's got to be one of those two because they're opposites.
Hmm.
Okay. Whoa, geez, went the wrong direction. Now let's clean up this line. Boom, boom, boom. Do, 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 do. 140, a 140. Now I helped you a little more than I would knowing that you're working hard. So I don't think that's a true reflection of where you're at. I don't
No,
think you're at risk, but
you
you know,
don't. I'm
no,
terrified.
no, no, I don't. I don't. Like I say, I don't think you're in the 95 category based on
No.
how much I helped you. I think you're right where I would like you to be. I think you're in the mid 70s, high 70s, and that will be fine. As your tutor, do I think we can do better? I think we can. It's
Yes.
this is a great place to be, Starla. The great place to be is where you're at, where the things that I want you to improve on are mainly confidence,
Hmm.
right? Trusting your
Hmm.
gut, knowing that that's my best answer. I'm sticking with it. You were really good on some judgment questions, particularly on economics. So every pony can trot seems to be
That's
working very
right.
well. So I like that. So you're going to continue to work. Now, are you a full-time? You said 300 hours. Oh my goodness. And a mom, that's crazy.
Yes, I have 6 kids, but some of them are in college.
Six. Oh my
Yeah.
God, you're a matriarch.
I
Oh my
have
goodness.
one that started college and one that started kindergarten.
Oh my goodness. Well, test question. You have a high standard deviation,
That's
a
right. That's
high
right.
variance, right? You have test question, a high range.
That's right.
Um,
So,
the reason I ask is just how much time are you going to do? What I would like you to be doing is no more than one practice test a day, and make sure you pace yourself. So I would give yourself permission today to take the rest of the day off,
okay.
and you can just refresh and reset before you get come back to it again, right? So
Okay. Yeah, I've been putting in about 12 hours a day every day.
wow, wow, wow,
Yeah.
wow. So, that's a great thing. So I'm going to let me just see here. And I want to go back here, and that's what we just did. And I'm going to print, and I'm going to send this to you by email for you to review. I think I can do this, so don't hold it yet because I'm not as technically literate as I would like to be. And